All right. Good morning, everybody, and welcome. My name is Don Kaufman, and you are watching a TheoTrade presentation. I like to get a few, again, informalities out of the way as I'm watching everybody kind of chat in the Q&A in real time. If you see me looking around a little bit here today, again, I've got the camera on, but if you see me looking around, I've got screens everywhere. So I've got a camera right in front of me and got 6 monitors kind of set up around me here. So I don't mean to be looking around, but to be able to read some of your questions and comments, see them on there. I always ask that people just chat in. I'm just curious for myself where everybody's joining us from. It's not imperative, but it's kind of interesting. Chattanooga, Tennessee, Pittsburgh. All right. Really? Australia, a couple of people from Ohio too. So the first question that always comes up, and somebody already asked it in here, North Dakota. I hear it's nice there this time of year. Sorry, did that one come out? Did I say that out loud? That was the inside voice that was supposed to say that one. Anyway, with that, we're going to start here momentarily. As I said, I kind of do a little informal. One of the first things somebody says, is this live? Here, let me show you how live it is. That's the market. It's live. It's April 5th. It's apparently 8 o'clock in the morning Pacific time. By the way, I am not in the Pacific region. I am in the middle of the Atlantic, which I will talk about here momentarily. A few things I do like to describe to you. First of all, if it's okay with everybody, I'm gonna stand up. My desk is going up. I'm not going down. The desk is going up. I'm going to stand up. It's a little easier for me to kind of walk around and do this. But so number one, we are live. Number two, I am located presently in St. Croix in the U.S. Virgin Islands. I spend about 4 months out of the year in Arizona. The remainder of the time, we now live here in the Virgin Islands. And it's kind of a lot of traders down here. It's actually what drew me down here in the first place. Just kind of a pandemic move. I think a lot of people moved around in the pandemic. I moved to an island in the middle of nowhere. So with that, we're going to start here momentarily. A couple of things I want you to know, and I say this kind of again informally. Number one, you can ask questions throughout the course of today's presentation. I simply state that because off to the side of my screen here, or I should say off to the side of the camera, which you don't see, is another monitor, and I'm kind of watching some of the questions on there kind of in real time. So by all means, if you have questions, please ask them. I mean, that's what we're here for. And if I don't answer you verbally, it's either I'm waiting to the end of the presentation or Brian Aponte, Jeff, Brandon Chapman are all answering questions here today in kind of real time. So they'll just pick up a question and actually type an answer directly to you. Without further ado, that pretty much wraps up the some of the informality. So it is live. You can ask as many questions as you'd like throughout the course of the day. If I don't get your question again immediately, or Brian doesn't get it, don't worry. We'll hit it towards the end of today's presentation. I'll stay on here, as long as we need to be able to answer some of the questions. So obviously, today we're going to be discussing Ultima Trades. So Ultima Trades is a high probability income generator. My name is Don Kaufman, and you are watching a TheoTrade presentation. A risk disclosure, I am not a financial advisor nor a broker dealer. I did spend many a year in the trading world and in the brokerage world. So I'm no longer officially in the brokerage world. I'll discuss my background here momentarily. Next on here this is why you're here today. So let's get to some specifics right off the bat. First of all, we're going to discuss what Ultima and Ultima Trades happens to be. This is something we've talked about extensively, really from the onset of volatility, which stems all the way back to the onset of COVID, which is now, we're 2 years and counting into what has been some pretty immense volatility that's hit the marketplace. So we're going to describe first and foremost what Ultima is, what it means. It's not ultimate, okay? And how this is absolutely idealistic for today's market environment to potentially generate monthly income. We're going to look at a couple of trading symbols we use on a daily basis to be able to create Ultima Trades. I'm actually going to show you that here momentarily. You're going to learn how and where to find edge as a retail trader. I like to stress this to you, that finding edge, we're going to find something very definitive, and I'm going to be able to explain something very definitive. And a lot of, quote unquote, retail traders. Retail is not a dirty word. I'm a retail trader. You're a retail trader. If you're sitting at home, we're probably not market makers and we're not proprietary traders. So we're going to discuss where and how to find retail edge, what edge really breaks down to. Number 4 on here is reap the benefits of high probability trades. But more importantly and more appropriately, we're actually going to learn how not to take large losses. So we're going to look at very high probability trades today and mitigation of risk, and which products are going to be viable candidates and which products are going to be a recipe for disaster. If you've never heard the term product before, listen, that just means like, could you trade Tesla? Could you trade, GameStop? Could you trade, Google? Like, what makes a good candidate for Ultima trades, and what makes, again, as I said, a recipe for disaster? Also, briefly, okay, this is a free auto expected move indicator. Make it very, very clear. Stay with me right into the end of the presentation. There is an indicator that we at TheoTrade here use incessantly. We use it almost on every video in some way, shape, or form, and in almost every genre of trade. We use this expected move indicator. It is absolutely critically important. It's an indicator that we believe everyone should have. We will provide it for you. By that, I mean, stay with me right until the end of the webcast. The indicator is a $500 value. Why do we provide it for you? Because it's not fair when I come on here in a webcast and I actually discuss, if you would, the expected move. And I'll explain what expected move happens to be, but I explain the expected move, and people are like, well, where do I get that indicator? We're going to give you the indicator. And again, no strings attached. We give you the indicator. I don't like when people, dangle that carrot in front of you and say, here's an indicator, it's $500. We're going to give you the indicator. I'm a big believer that ultimately, no code should be suppressed. This is a code like anything else, and we'll provide you that as our gift to you. Stay with me right until the end of the webcast. I'll provide you that link. The indicator, this is auto expected move, but again, I like to be a little bit more dynamic. There's a reason. There's a reason that we here at TheoTrade, we prefer, and again, me specifically, I prefer to host these types of webcasts when markets are open. And I hope that's okay with you. I know for some of you that are out, West Coast US, it's early in the morning, 8, 10 in the morning, just, cracking open an eye, got some coffee over here. I've been up forever, people. I'm in the middle, again, I'm literally in the middle of the Atlantic. I'm about a 2.5-hour flight from Miami to get out here to the Virgin Islands. We just moved back out here this past week. So last week we jumped back to the island from Arizona, and I'll be here now for at least a couple of months. It's nice this time of the year. Anyway, so it's for me it's 11 o'clock in the afternoon, but markets are open. And one of the things that I really stress is I like you to see the dynamic of markets open. I don't mind trading. By the way, everything I do here today, and I'm going to reiterate this is no holds barred. I don't care what you see in my account, whether it's a profit, whether it's a loss. Okay. This is the, the daily P&L that I'm actually highlighting right here. Wouldn't matter if it's up 8 grand, down 8 grand. One thing I'm emphatic about here at TheoTrade is this is a no holds barred approach. People always say that, they see like an advertisement on Facebook and they go, well, I'd love to see your track record. Great, I'll show you my track record. We'll show you everything. I cruise right over to the account statement, show you every profit, every loss, every trade that we've done. And I hope that's okay. When I say it's a no holds barred approach, I am very forthright. I like to show this again while the market's opening because it's dynamic, and I do trade and will trade extensively today. So again, hope that's all right with everybody. And yes, I will gladly show you every Ultima trade that I did all of last year and even the first quarter of this year, no problem. Auto expected move, as I was saying about this, I use this all the time. What auto expected move displays, and I'm just going to draw the little 3 lines, and then we're going to move on. You ready? Okay, see these 3 lines. It's a dark line down here, line up here. That is what the option market depicts risk to be on a week-to-week basis. So if we move outside the expected move, it's actually a display, if you will, of inefficiency in a marketplace. Okay, markets are supposed to stay inside of the expected move approximately 68% of the time. It's what we term a standard deviation. This is the option marketplace. Like when the expected move indicator comes out, I am not, I have no bias in this expected move. It just tells you, hey, Tesla's going to move. And I'll just give you an example. Tesla's going to move up $70 or down $70 within 1 week. And you say, go fish. Does it stay in the $70 move or not? And this indicator can be used for everything from risk management to bullish and bearish trades. Look, a breach of expected move, a breach of expected move, a breach of expected move. 3 weeks in a row in Tesla. You realize like Tesla is the S&P 500 at this point. You're looking at this rip and rally that's transpiring in the market. And most people aren't aware. When I say a rip and rally is transpiring in the market, okay, the S&Ps, though, are not doing anywhere near what Tesla was down almost 42% the other day. It's only down like 5% on a year-to-date basis now. It's incredible. I mean, your market pretty much right now comes down to what Tesla's doing. And you wouldn't have known that if you hadn't looked at something like expected move. So a few housekeeping items here today. This is skill set. Listen, I just threw some stuff at you real quick about expected move, but this is a skill set, okay? Over the next probably hour and a half, and that's okay with everybody, I am definitely going to run over. I keep adding to this presentation. Somebody always says like, I've seen this before. Yeah, you haven't seen this before because I'm constantly adding more to this particular presentation. Ultimate trades, this is what works. We've been talking about ultimate trades now 2 years. Okay, you're like, oh, it's kind of getting old, maybe a little stale. No, it works. It's what works. Okay, and I'm emphatic about whatever works, you hit the accelerator, you go for it. You do more of what's working and less of what's not working. And right now, ultimate trades is what works. Shut the door, turn off Skype chat, whatever else is distracting you. Close Facebook, delete Facebook, get rid of Facebook. Phones on silent mode. I know mine is, okay? Kick out the kids, definitely kick out the kids. The grandkids, get rid of them. The dog can stay. You took the time to be here, and I'm serious. Focus on being here. This stuff's important. Here's a little bit about me. So I'll give you the nickel tour of myself. So again, my name is Don Kaufman. If you ever need to get a hold of me after today, I answer emails. And I'm very emphatic about that as well. We use a common inbox, however. And when I say a common inbox, just go to support@TheoTrade.com, put Don in the heading. You don't even have to put Kaufman, put Don in the heading, the email goes directly to me. So by all means, email us. If you ever need to get a hold of me, we are reachable. That's not true of a lot of people, I think, in this industry, but email us anytime. I answer, 3-4 hours emails a day. It's kind of the lifeblood of what we do. So a little bit about my background. As it says at the top over here, I watched order flow for 15 years. That in large part brought me here. And people have no idea what watching order flow means. First and foremost, I did grow up in and around this business. I had family that were market makers. My uncle was a trader in Chicago in the 1970s. He started a big trading firm. Anyone that's from the Chicago area in Illinois has probably heard of the firm. It was called O'Connor and Associates. O'Connor and Associates sold themselves to the Swiss bank in 1992. It was a multi-billion-dollar deal. I got involved in trading in the late 90s. I was 3 weeks out of college, and I got involved, and I went to Chicago. A few years thereafter, there were some individuals that worked on the floor of the Chicago Board Options Exchange. They said, "Hey, man, we know you. You're 23 years old. What are you doing for the rest of your life?" I have no idea. They said, "We're starting a brokerage firm. We want you to come with us." Okay, no problem. So I left the the trading world and went off to this brokerage firm. Well, it turned out that brokerage firm was called thinkorswim. It's a pretty good deal for me because I went to work for them in 2001. And we went on at thinkorswim to be the largest option boutique trading firm. We built, obviously, the thinkorswim platform. I was on the executive team when we took the company public in 2007. Obviously, I was there in 2009. When TD Ameritrade bought us. I signed a 5-year lockup clause and spent the next 5 years running education for TD Ameritrade. And that, in very large part, gave me access to the largest options order flow pretty much in the entire okay, world. And that basically is, again, what brings me here today is when I say I watched order flow, people, I had access to everything you did. How, okay, I thought of education in this marketplace might differ from some people, right? I know some people always talk about, well, I was on the trading floor and I learned this, and I was on the trading floor and learned that, okay? That crap doesn't work for the retail world. Let me tell you what works for the retail world. When we were at thinkorswim and we were at TD Ameritrade, we studied client accounts. We studied everything you did in every way, shape, or form. It's actually one of the best, I think, benefits of working in the brokerage, world. You get to see what everybody else did, and that's what watching order flow basically means. I mean, how valuable is it in a time like 2008 when the market's crashing to be able to watch every single trade that's going through thinkorswim pipes? It's invaluable. Okay, it's priceless. It's absolutely priceless. Well, we took it a step further. We had actuaries breaking down trades, and we literally knew what worked and what doesn't. And we learned all of this from watching literally billions in dollars of other people's mistakes. But more importantly, and more appropriately, the knowledge of what works best, specifically for retail traders. There's only one little caveat to that. When you work at a brokerage firm, you're under obviously the direct regulation of the SEC and FINRA. All of the knowledge that we gained at the brokerage side of the business, they didn't really let us say like, hey, this works best and this works best. We were data mining and really couldn't talk about it. So a number of us left the TD Ameritrade world in 2015, and we built TheoTrade, and that's obviously what brings me to you today. So TheoTrade, we officially launched in January of 2016. And we've obviously been here ever since. We have 6,000 plus full-time clientele on our platform. And I'll show you exactly what that amounts to on our education platform throughout the course of today. So again, let's get into it here. Again, if you ever need to get a hold of me after today, support at TheoTrade.com. I still do a couple of, CNBC. This is actually TD Ameritrade Network. I do a spot every Wednesday on the TD Ameritrade Network. I also still do some CNBC, like Fox Business and so forth. This is one of the more memorable CNBC because it's myself pitted against, of course, Kevin O'Leary. By the way, I was the short, he was the long. It's a couple of years ago, but when Apple went down, it was good stuff. All right, let's get down to business. What are Ultima trades? Okay, higher volatility has resulted in significantly more options premium. That makes options prices higher. Time out for a second. So right off the bat, I just said higher volatility and I said options. I know some of you come here today and you're vehemently opposed to the word options. That's okay. Here's one argument though that I have. And if you're tuning in right now, please, okay, understand. Options these days are truly the cart leading the horse, meaning that the options order flow and the option market itself, okay, is actually driving stock price. And very few are familiar with how that actually transpires. But when you buy an option, the market maker sells you the option. The market maker that sells you the option has to buy stock to mitigate his or her risk, right? So what you get, and I'm sure some of you guys have heard these terms, gamma squeezes, okay? How many people here have heard the term gamma squeeze? They have no idea what a gamma squeeze happens to be. All it basically is, clients are buying calls. That's retail clients, people that have like Robinhood accounts are buying calls. It's causing the market maker firms to sell you the calls. In turn, then they sell you the calls. They have to buy stock and it drives the stock up, okay? So we've seen significantly more volatility in recent years. I think the way that most people, depict volatility is the VIX, okay? Take a look at VIX over the last 3 years. I think this really, it does it for me. Right here, okay, that's the onset of COVID. Nothing has really normalized. Yeah, volatility came down to some degree, but like volatility has a new floor since the onset of COVID. And obviously, there's so much geopolitical risk right now going on. I mean, where do you even begin? Like volatility is just, it's going to be considerably higher and higher for a period of time. But there's so much more to it. There's also what we term option implied volatility skew. Again, just, by yes or no. By the way, Y is yes, N is no. How many people here truly look at something called skew, okay, periodically? Just yes or no. How many people even know what skew are? How many people even know what skew is? Just yes, no, huh? Yes, no, maybe so. It's pretty quiet in here. Okay. Very few people tend to look at skew. They'll look at something like the VIX, but the VIX, frankly, is what I would term as my predecessor's volatility indicator. Skew is also very much worth looking at, which we're going to discuss here momentarily. We also look at what's called the volatility of the volatility. All right. So first of all, let's discuss skew. Skew, all right, is almost, if you will, like a distortion, okay, in how things are priced. This is what we call a normal distribution curve. This is skewed, this is skewed. There's actually different names, for different curves, but a lot of people are not aware markets right now have record skew. And there's actually a symbol for it. By the way, don't take my word for it. Go on any trading application, okay? You could type in any trading application, SKEW, okay? Let me say it again. S is in Sam, K is in kick, E is in echo, W, skew. And it looks like a bunch of dots. And you go, why is it all these dots? Because it's only calculated at the end of the day. You can actually change your chart to like a line chart or an area chart. But here's an area chart. Look, record skew, 146 skew. So skew dropped a little bit in the last couple of weeks since volatility, but it's really, really high. What skew provides is an incredible advantage, an incredible edge. And I'm going to describe that here momentarily. So I don't want to throw you off. All I want you to understand, higher volatility in options, okay, often amounts to more price action in stocks. Like markets have been rocking. That's what you just want to think about. Markets have been rocking. Skew has been incredibly high. And we have this thing called the volatility. The volatility remains record highs. That's what Ultima is. And I backtrack for a second because I think it's important for me to make this distinction, okay? When we discuss this word Ultima, a lot of people think it means like it's the ultimate trade. That has nothing to do with it. Ultima is actually the volatility, the volatility, the volatility. So when we're discussing ultimate trades, there is edge right now, specifically in Ultima, okay? We are going to be selling skew, we're going to be selling volatility, but it's really Ultima that we're going after. All right, so it's very critical. Now, somebody actually asked me, does skew reveal anything about market directional bias? I don't believe so. And I think some people do believe that. I don't believe so, because I've actually done a tremendous amount of research on it. I've never found anything with skew and directional bias, but I will tell you a higher skew unequivocally makes, for great edge. So, because the next slide over here is a great one. It says, how can we use skew to our advantage? It sounds really cool, like a cocktail party. Like I'm talking about Ultima, I'm talking about skew, but skew provides edge in sale of the out of the money options. And again, I said options. Okay, we're going to talk a little bit about options. And I know, as I said a moment ago, I know some people are like vehemently opposed to options, but recognize options now, they're as mainstream as they get. Listen, I've been trading options myself, okay? On the professional side, I started in 1998 at the ripe old age of 22. I started contracting for thinkorswim at 23. I went full-time there at age 24. I've been in the business my entire life. I've traded, and by the way, because, like, oh, he's an options guy. People, I trade stocks. I trade options. I trade futures. Hell, I'll trade any of the crypto markets. As long as it's a fair and two-sided market, who cares? Who cares what you're like, oh, he's crypto too. That's a naughty business. There's options on it now. So who cares what, it doesn't matter what you think. Because if it's a fair and two-sided market, I would, trade cans of soda if it was, it's a fair and two-sided market. It doesn't matter, what it is. It matters where you can make money and where you can find edge. And unequivocally right now, options is where it's at. A ton of traders are currently buying options and in effect tweaking pricing to be beneficial for premium sellers. Now, that's the first time I've mentioned it. Now, I'm going to tell you what changed so much in the marketplace. What has changed? When the pandemic hit just over 2 years ago, okay, exactly 2 years ago, more accounts opened in April of 2020 at retail brokerage firms than like ever before in any month, okay, by 300%, meaning that tens of thousands, millions of people were opening up brokerage accounts in April of 2020 at firms like Robinhood, okay? The markets were going nuts, all right, during the onset of the pandemic. But the interesting thing is when they opened up those brokerage accounts and started trading options, and seriously, a lot of you probably started trading options right in that time frame of 2 years ago. When they started trading the options, though, most of the brokerage firms only allowed you to buy options. And in effect, it actually distorted the entire options marketplace to be beneficial for premium sellers. What's interesting about this is what I call retail traders gone wild. This just happens to be from April 1st. This is a nightly report that I get. By the way, there's nothing too important in this. It just shows you that's how many option contracts traded on April 1st. So it was about 41 million option contracts traded. 6 years ago, when I left the brokerage industry, it's now 7 years, but 6 years ago, 7 years ago, when I left the brokerage industry, the average was 16 million. Today, there's 41 million to trade a day. It's unbelievable. Okay. It is retail gone amok. Like brokerage firms, business is a booming. And I'm telling you, the options marketplace, it is unequivocally, this is where it is at. But you're going to have to learn the right way to approach this, right? And that's exactly what we're going to discuss here now today, learning to sell options. If you want to know what Ultima is, okay, and we're going to describe precisely what it is, and we're going to give you kind of the full, fledged, hey, here's Ultima. This is what you can do. This is what you can make. Here's what the risks are. We're going to show you everything here. Again, I am very much no holds barred. As I said when we started this today, I like to do this when the market's live. Why? Okay, because you can, listen, it's great to be able to talk about trades, but you want to be able to see people's positions. Like when I say it's no holds barred, like this is what I am discussing on this particular front, is that you want to be able to see somebody's account, tick for tick. By the way, that's thinkorswim account. I use Tastyworks extensively. All right, this is the P&L from the open, the P&L and a percentage gain, like everything is in here. How much margin I'm tying up, because I don't want you to think that I'm doing something that you can't. There's some bigger positions in here where there's 22 grand of margin. There's some smaller positions in here that's like 9 grand of margin, but that 9 grand of margin's in an IRA. I'm going to show you again. It's everything. Okay, full Monty, everything. All right, you don't want to see that, but that's important. Total transparency. So we're going to discuss a little bit about selling options. Now, many of you have actually heard kind of through the grapevine that selling options is a great way to make money. How many people, again, have heard that? Just a yes and no, okay? Y for yes, N for no. We're making this interactive. These are not rhetorical questions. Jump in here anytime. And again, I like doing these presentations live so that we can actually go back and forth a little bit, because I don't want to sit here and talk to myself for like, the next hour, hour and a half. So people hear this all the time. But the issue is if you've experimented with selling options, and some of you have, you find out pretty quick, all right, that if you don't know what you're doing, there's definitely going to be a lot of risk involved. Okay. The other thing people are always concerned about with selling options, like I guarantee that somebody is already sitting there and thinking to myself, this is going to tie up margin, too much money. I don't have that kind of capital. You don't have to worry about that anymore. You can trade options. You do have to have a balance of $2,000, okay? But you can do anything you want with the $2,000, okay? Don't even, like people talk about day trading, margin restriction. I spent 15 years in the brokerage business. I can tell you every restriction, every way around it, okay? I am extraordinarily well-versed on every SEC and FINRA rule out there. I'm going to tell you right now, you do not have to worry about margin if you have $2,000 or more in a brokerage account, you can do anything I'm discussing today, right? You're not going to be able to do it in a huge size, but you can do this. And you don't want to think that, oh, I'm limited. Because I know, again, somebody's already thinking about margin. Come on, admitting it's the first step. Who is thinking about margin? I can't do it. You can do it, right? Today's session, I want to separate myth from real risk, fact from fiction, all about selling premium, all right? The next thing is don't panic. You can do it. For today's presentation, you may know nothing about options. That's okay. Like, you do not have to know a lot about options or anything about options for today's presentation. What I want you to be able to grasp is when somebody comes here and they're brand new to this business, they just want, the absolute basics. Listen, for those people that are brand new, I want you to be able to grasp big concepts. You're brand new, you never traded an option. Look and to learn about probability and risk, right? That's for the starters. For those of you that are more experienced, because again, we get people that come from all factions and all walks of life. We get everybody from the absolute novice to, the electrical engineer that's just like deep into this. Again, admitting it's the first step today. For those of you that are more experienced, then I want you to be able to grab the little nuances, okay? What I talk about is called criteria, and criteria is basically, it's the nuts and bolts behind this. When I say nuts and bolts, it's like, what options am I using? Which ones am I trading? Why am I trading them? Where's the edge actually found? Again, we're going to dive into this. I will reiterate once again, and you can see I put it in here. Selling premium can be done in small accounts. The other thing, you can now sell premium inside of an IRA. Okay, unequivocally, you don't, and again, everybody looks for some type of like bias that's out there where like, well, my brokerage firm doesn't do this. Okay, we can get your brokerage firm to do anything you want them to do, right? You have to know the right questions to ask. Again, it's been a long time in the brokerage world, and we'll walk you through all those nuances. So there's no reason that anybody in here with $2,000 in a standard brokerage account can't do this. $5,000 in a retirement account, and you can do this, right? So we're going to talk a little bit about the facets of selling premium. Selling premium, okay, in this case, means selling options, okay? So selling premium means selling options. It can be referred to in a number of different ways. You can say selling premium, credit spreads, short call spreads, short put spreads. Anybody ever heard those terms? Bull call spreads, bull pair, bear put spreads, and all kinds of crazy terms. Delta neutral trading, selling naked. I like using the selling naked. That sounds exciting. Selling premium can be used to create both bullish and bearish trades, okay, but are generally considered market neutral. You've never heard the term market neutral? For today's session, the one thing that I want you to really resonate with you for today's session, directional bias is not really going to help you all that much. Directional bias is not going to help you, meaning that I'm so bullish or I'm so bearish, okay? I mean, I can show you trades in here, and I'm serious about this. I can show you trades in here. I was showing this to somebody earlier. I'm down 36% on a trade. You're like, oh, you're getting killed. I'm down 36%. I put on a bearish trade on February 23rd, okay? And it's only down 36%. That's amazingly good. You think about that for a second, you're like, wait, he said he's down, but it's good. Again, there's no holds barred. You gotta look at the reality of this business. You will have eventually losses. You will have some gains. What we're going to do, though, is make absolutely sure that those gains will overcome any losses you can take. Let's get into it. Probability and profitability. You're trading, and everything you do in this business is actually based on probability. Doesn't matter what you think. Everything you do in this business, you can boil it down to some type of probability. And you and I, we can create trades all day long with a 90% probability of success, but you can still lose money. One of the emails that we get constantly here at TheoTrade, okay, constantly, is people literally say, how often are you guys right? And I can tell you right now, it doesn't matter. It doesn't matter how often we're right, okay? It's in excess of 90%, but that doesn't matter because being right doesn't necessarily constitute that you're going to make money. Because what happens to people, and anybody that's here that's had some experience in this business, what happens to you? You make money, 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 big loss, you lose your shirt. And then where are you left? Like, what does it matter that you're right 90% of the time? Okay. In the end, being right and being wrong has no place in this business. I know that that's everything that CNBC ever taught you. CNBC just gets on there and they go, you got to be right. You got to be right. You got to be bullish. You got to be bearish. You got to be this. Okay. But picking a directional bias, okay, or as somebody just said, stepping in the way of a freight train, okay, is insane. We're not going to step away in the freight train. You need to understand that probability alone does not make you profitable. You got to remember that. Okay. You just, again, you got to understand that the buck kind of stops here. Like, there's nothing I haven't seen you do. What do you mean you? Okay. Yeah, I'm talking about you. I worked at the brokerage side of the business and had access to everybody's account. For 15 years, it'd just be like, what's this guy doing? What's this guy doing? Kind of learned a lot from it. So you got to understand, again, when I separate fact from fiction and all the BS that's out there, listen, probability, I don't care whether you're right 95% of the time. As somebody just said, you don't want to pick up pennies in front of a freight train. And I love that one. I love that saying because you're exactly right. You don't want to go out there and be like, pick it up, pick it up, pick it up, hit by the train while you're picking one up. That's not going to work either. Markets are always a series of trade-offs, higher probability, higher risk. 90% of the time, still lose money. So where can you find edge? That's what people are here for. Good, because that's exactly what we're about to show you. First thing we're going to talk about is discovering probability and premium selling tactics, right? So I'm going to come in here and I'm actually just going to script a little example for you. So hang with me as I'm bringing I've got like a little write-on board over here and making sure we're all good. All right, so here's a stock. Stock's at $50. $50. By the way, every example I call stock. It's not just stock, it's stock. So here's a stock and the stock's trading right at $50. We don't own the stock. Do we want to own the stock? No. Okay. So let's say no to stock. Why do we not want to own the stock? I'm going to be very frank with this, right? There are plenty of positions where I am long and or short stock. This is not going to be one of them, right? What I want to do is generate monthly returns. Okay, I want to get in, I want to get out. I don't want to have to worry a tremendous amount about directional bias, but there's always some directional bias to markets. Like when markets get big and get scary, it's like literally paddling out into a set. By the way, I'm pointing, you guys can't see this, but right on the other side of this window is the beach. Shh, don't tell anybody, okay? But it's like paddling out into a huge set when there's markets get volatile. You got to know what you're doing by that point. Right? Markets are starting to get a little volatile today too. So you have this $50 stock, and all I want to do off this $50 stock, okay, is create a high probability trade that's going to work for me. I'm going to generate some, not a lot, but some, okay, premium, which is dollars and cents on a monthly basis. But I want to be able to get in, I want to be able to get out, I want to be able to do it effectively, and I don't want to be able to substantiate a huge amount of risk. So what I'm going to do for the first example is I'm just going to write something up here and then I want to take you through it. So do we own the stock? No. Do we want to own the stock? No. Why don't we want to own the stock? Ties up a huge amount of capital, right? Takes a crap load of risk. Why take the $50 of risk? I don't want to do it. So I'm going to go out there. Okay. In this first example, I'm going to sell, okay, a 60 call. And for that 60 call, I'm going to collect exactly a $1 credit. Now I'm just going to write it down here so everybody can see it in full text. I'm going to go out and I'm going to sell a 60 call. I'm going to sell a 60 call and I'm going to collect a $1 credit. Now, I know some of you don't know anything about options. That's not going to matter. Don't worry about it. And we're going to say that this call is good for 2 months at a time. Okay. Time out. Now, I know some of you have absolutely no idea what an option even is. So we're going to talk about what a 60 call is before we go any further. So calls, puts, predominantly today, I'm going to talk about calls. Why am I going to talk about calls? Because it's easier on you, especially for those of you even that have experience. Puts confuse people. Why do puts confuse people? Because I'm buying the right to sell. I'm selling the right to sell to somebody else. I'm like, oh my gosh. Anyway, we're going to talk about a call. let's not even talk about selling a call. Let's just talk about what a call is right now. What's a 60 call? Okay. The stock's trading at 50 bucks. I get it. The stock is trading at 50 bucks. And we're going to talk about a 60 call. Initially, though, let's just talk, as I said, about what an option is. In options, we have both buyers and sellers. Every time that you trade an option, okay, whether you're a buyer or a seller, someone's always on the other side of the transaction. It doesn't matter whether it's a market maker, another client, but buyers and sellers, buyers have rights, sellers have obligations. Let me actually take you through an example on the buy side. So, by the way, when the palms are facing me, I'm a buyer. Okay, when the palms are facing you, I'm a seller. So let's say I go out and I actually buy the 60 call. What's buying a 60 call? Buying a 60 call would give me the right, not the obligation. Okay, it gives me the right to buy the stock at 60. I could go out right now and I could buy a 60 call. If I bought a 60 call, it means I want to do what? Buy the stock at 60. Do I really want to buy the stock at 60? No, I don't really want to buy the stock at 60. You go, then why are you buying a 60 call? Because the 60 call gives me the right to buy the stock at 60. Do I have to buy the stock at 60? No. If the stock goes from 50 and jumps to 70, I have the right to buy the stock at 60. Everybody else in the world has to pay 70. So if I have the right to buy the stock at 60 and everybody else has to pay 70, that option is worth at least $10. By the way, a 10 is up here. Okay, 10 is up here. So that thing is worth at least $10. So let's actually talk a little bit about the buy side and then the sell side. So if I buy a 60 call, it just, I mean, literally what an option is, and people make this so difficult. When you buy a 60 call, you have the right to buy the stock at 60. But if you buy a 60 call, let's say we did buy a 60 call, the stock has to go from 50 all the way up to 60 just for you to be able to do what? You're not even breaking even yet because you need to what? You don't need it at 60. You needed 60 plus the dollar you paid. You needed it at 61 just to be able to break even. Okay. The moment you buy a 60 call, you're on the clock. How many people have ever done that? That trade is a total flyer. It's a low probability flyer. When I say it's a low probability flyer, you're buying a 60 call and then you get down on your hands and knees and you just pray, oh, please. You pray to the option gods, please let us go up and let us go up huge. And this is what was going on a ton last year, right at this time, right? You heard about the meme stocks. I just call them the me stocks. It's all about me, myself, and I. But all these meme stocks and the big rally that we saw for part of last year, especially in January and February of last year, okay, all people were doing is buying a bunch of calls and then praying that we go up. And if we went up big, they scored big. But most of the times, what happened to the calls? The calls did what? Expired worthless. So by buying a 60 call, you have the right to buy the stock at 60, period. You have to buy the stock at 60? No. What happens if the stock goes from 50, though, and jumped all the way up to, for instance, 70? Could the stock go from 50 to 70? It could. If it went from 50 to 70, 60 call is going to be worth $10. It's crazy. Okay, it's crazy, but that's the reality of it. All right, so let's not talk about, though, buying the call. Today, we're going to talk a little bit about selling options. So instead of buying a 60 call and having the right to buy the stock at 60, I'm going to sell the 60 call. And for this first example, just hang with me so we understand conceptually what we're doing. Ready? I'm going to go out and I'm going to sell a 60 call. Do I own stock? No. Do I want to own stock? No. Why don't I own the stock? Because I don't want to own the stock. I just told you that a second ago. I'm going to sell a 60 call. What do I get for the 60 call? I get myself into an obligation and I get $1. What am I obligated to do? Give somebody stock at 60. But Don, you don't own any stock. I know I don't own stock. I just said you that a minute ago. So I'm going to go out and I'm going to sell a 60 call. If I sell a 60 call, I am obligated to give somebody my stock at 60. But for that obligation, I sold myself into an obligation. I feel obligated, right? I collect a $1 credit. And I do. I get to collect a $1 credit on there, right? So for that dollar credit, what happens? After 2 months, I get to keep the buck. So what can happen to the stock? The stock can stay totally flat. If the stock stays flat, what happens? I keep the $1. If the stock goes anywhere down, what happens? I keep $1. If the stock goes up, shy of 60, I keep $1. If the stock goes to 60, what do? I go, I wet myself, but I still keep $1. So think about how much give and take you have. You have from 50 all the way up to 60, okay, where you just sold that thing and you sold it naked. All right. So let's say we're selling it naked. keep the dollar, yada, yada, yada. All I want you to be able to grasp out of this particular example, okay, forget about like, we're not going to go out and just sell a call naked. We're not. But what I want you to grasp out of this example is from a probability point of view. Step back from the trade for a second. If the stock stays flat, you make money. If the stock goes down, you make money. If the stock goes up, most likely you make money, but the stock has to get above 61 for you to start doing what? Losing money. From a probability point of view, is this a high probability trade? Yes, it is. Okay, that's where you're supposed to chime in. Dead silence, crickets. Okay, crickets. I know I'm having a dramatic impact on you right now, but dead silence over here. You good? Is everybody okay? The most important thing is we actually understand conceptually what's going on. Yes? No? Maybe so? I got one or two yeses. Okay. Okay. Just making sure, because I am not doing this for me. I've been trading these things since I remember like conversations because I literally grew up in a family that traded. I remember conversations as young as the age of like 13 about calls and puts. People always ask me like, how'd you learn the business? I'm like, I don't know. Okay. It's like, if you grew up in a family that was bilingual, how did you learn, Spanish and English, at the same time? And I don't know. Okay. I don't know. I grew up around, but I want to make sure that you understand conceptually that this is going to be a pretty high probability trade. Let's take this exact concept into the real market now. Let's say into the real market. Okay. This is a market. Spooze. We're getting rocked in the Nasdaq today. We're down almost 2%. I don't know about you, but I kind of like the project. All right. By the way, that's a good day if I've sold premium. It's a really good day. Okay. This was just up 8 grand. Now it's almost up 10 grand. So bring the pain. There's an example. I love to use this one because there couldn't be a better example right now than Twitter. Okay. Why am I using Twitter? First of all, Twitter is exactly like a $50 stock, but it was a $40 stock and it jumped up. But I think Twitter is an awesome example because I want to show you like, let's go like all 73 days out and go out here. And let me just show you selling something for like $1. Perfect. Okay. I could go out right now and I could sell a Twitter call. Okay. Now, would I advise doing this? Well, no, because first of all, this would tie up huge margin, but I just want you to understand conceptually. Here is I could sell, right? A 75 call. I could sell a 75 call. And for that, if I did that right now, I would collect at least, let's say $1.14. I could work that at $1.14. And then what do? I go, I do nothing. Everybody's doing something. Okay. I'm going to do nothing. And people look at this, it's a high probability, but could I lose money in there? Of course you could lose money. What happens if the stock shot up huge? That's exactly, somebody just came in. It's a high probability. Okay. It's a high probability. How can you lose money if the market moved huge? I know that. I'm just setting you up. What's the probability though in this trade? See, what I need you to understand before we go any further, what I need you to understand is how high probability trades function. So we're actually going to go in here to options, theoreticals, and Greeks and pull up probability out of the money. Did you know that trade, if I did the trade that I just brought up a second ago, okay, if I did this trade, it has what? A 91% probability of making 1 penny or more. Now, a lot of people question these. It's probability OTM. That means probability out of the money. Okay. How many people here use probability equations on a trading application? Almost every single trading application now has them. Every single. First trading application to ever have this was thinkorswim, unequivocally. Why? I built it. Okay. Helped build a lot of the algorithms in here. The probability calculations, you can find them on E-Trade. You can find them on Interactive Brokers. You can find it on any Charles Schwab platform. Definitely E-Trade has them. Okay. My friends now work, the individuals that ran thinkorswim, that built thinkorswim, that executive team, one of them runs Robinhood. Another one obviously is still at TD Ameritrade. Another one built Tastyworks. Okay. Another friend, she actually runs E-Trade. Right? Another one manages risk for Interactive Brokers. They all have the exact same probability equations in them. But this trade has a 90% probability of making money. And you go, that's so cool, man. I've never actually seen anybody explain it that way. 90% chance, okay, that you're going to make basically $1.15. But we haven't talked about the loss side of it. We will. Don't think for a second that I'm not looking at the risk and thinking, what if they come for me in the night? Okay. But I wanted to show you Twitter because I thought it was like, it's a cool, real example where the stock shot up through the roof. And if you missed it, Elon Musk is now a board member of Twitter. By the way, check that out. People don't know maybe the history behind it. Elon Musk, okay, came from the PayPal mafia. If you've never heard that term, the PayPal mafia includes Dorsey, who obviously founded Twitter, who's no longer, he's on the board of Twitter, but he's no longer the CEO of Twitter. Anyway, they're united, okay, holding hands once again. Anyway, the tweeters loved it and the stock shot up. But I wanted to show you, like, in the event that the stock even rocketed up, okay, let's say it happened again, it still wouldn't hit the 75 level. That's $25 further out of the money. That's one of the points I wanted to make. Like, I'm in like the nosebleed section. I'm looking down at it. Let's continue on. Let's make sure everybody's good. And let's kind of continue onward from here. Okay. So selling options equals positive time decay. Listen, go back and review a little something here. It's going to get interesting. When you sell options, every day that passes, okay, sees the dwindling of options premium. As time passes, the options you sold decay exponentially. So let's take a moment to review decay. So most people are familiar with this. Anybody here that's traded options, has probably seen a decay graph, right? Okay, anybody seen a decay graph? Yes, yes, yes. Okay, how many people have seen this decay graph? Yeah? Okay, I'm going to tell you something. Ultima has changed everything. Okay, when I say Ultima has changed everything, most people have seen a decay graph, but this is a little bit misleading. By the way, most people have seen the wrong side of a decay graph. This is what happens to a lot of people with decay. So you go out and you buy, okay, a 100 call, and the decay kind of works like that against you, right? So you buy a 100 call. What'd you pay for it? I paid $3. And then right after you own it, you buy a 100 call. By the way, when you buy a 100 call, what do you want the stock to do? When you buy a 100 call, what do you want the stock to do? I want it to go up. But let's say you buy a 100 call and the stock doesn't do anything. So all of a sudden you buy it for $3 and the stock does nothing for a week. Now your option's worth $280. What happens? Then you go, I'm okay. Then another week passes, goes from $3 to $280. You only lost 20 cents. Another week passes. Now your option's only worth what? $2. Then, okay, another few days pass. And what is it? Your option's worth 80 cents. And then eventually it goes to zero. Now, does that make sense from a decay graph point of view? How many people have seen that before? Yes, yes, no, maybe so. Okay. Because one of the things I really want to hammer home to you about this, that is the plight of those that buy options. Okay. And I'm actually going to tell you from my own experience, this is what I got to watch order flow for 15 years. And in watching order flow for 15 years, do you know how many people email me and they have an example on, or they have like a position on, and they email me and they were like, I went out and I bought an option for $3. And I go, yeah. Okay, so you bought an option for $3 and nothing happened the first week. And I go, what happened? They go, I'm okay. It's worth $280. Nobody ever says I'm wrong or I'm in trouble. After the first week and only losing 20 or 25 cents, they go, I'm okay. And then another week passes and they go, I'm in trouble. So you go from a $3 option to a $280 option, I'm okay. You lose another 80 cents and you go, I'm in trouble, to another week passes and I'm in trouble turns into I'm screwed, and then the option goes out worthless. Anybody ever experienced that before? By the way, if you haven't, you simply haven't traded. What I want to get into right now is this. This decay graph is not the decay graph that we're using. We, okay, are going to now teach you Ultima. What does that mean? Okay. The edge in Ultima is understanding, all right, where the best amounts of option decay are found. Now, if I ask this question, and I'm serious about this, if I said to you, Where is the most rapid amount of decay? Everybody says short-term options. Sell stuff that's got only a couple of days left or even 1 day, because options decay faster the closer you come to expiration. But now I want to get into the real question. Where can I sell options, make really, really good money, but take minuscule amounts of risk? Let's get into it. Okay. Here is Ultima. So once again, we're going to discover probability and premium selling tactics. I'm going to take a very similar example as to what I did a moment ago. But now, okay, we're going to go, what, to $100 stock. And I'm going to come way out here. And I'm going to sell, in this example, okay, a 120 call. And for that call, we're going to collect exactly a $1 credit. We're going to make this option 3 months out in time. Okay. So again, we're going to sell a 120 call. We're going to collect exactly a $1 credit. Okay. Time out. How far out of the money am I? How far out of the money? When I say out of the money, you realize this is a $100 stock and I'm selling the 120 call. I'm 20% out of the money, meaning there would have to be a 20% rally in this underlying for me to take a hit. Can a 20% rally happen? Yes, absolutely. 20% rally. So am I out of danger? No, not totally out of danger. Okay. But I want to actually think about, okay, the probability of a 20% rally is very, very small. Okay. But given 3 months, 20% rally in 3 months, Don, that can happen. I get it. First of all, let's focus on probability and price. I sell a 120 call. Then what do? Absolutely nothing. If the stock stays flat, I make a buck. If the stock goes down, I make a buck. If the stock goes up, even considerably, I still make a buck. The only place I can lose money, I really start getting nervous at 120, but 121 and above, I'm going to start taking a hit. It would take a 20% rally. And you have to realize what I'm actually doing over here initially is I am selling you the nosebleed seats of a game. You're not even like sitting in the stadium. Like you're outside in the parking lot tailgating, okay, when there's a football game going on inside the stadium. That's how far out of the money you really are. Okay. Why do I do this? Because this is where edge lies. And we haven't talked about risk management at all. The first thing, and again, I know some people are looking at this, they go, what about margin? What about this? What about that? What about risk management? Wipe it all clean. The first thing I need you to understand, this 3 months out in time is unbelievable decay. It's not only options decay, it's Ultima. What is Ultima? Now you're going to see. Now you're going to see Ultima. We're going to go in, okay, and I'll use thinkorswim. It wouldn't matter if I use thinkorswim or Tastyworks. And again, I trade on both applications. I got positions here in Tasty. Okay. I got plenty of positions over here in thinkorswim. You get to see everything, as I said. We'll go to thinkorswim and I'm going to type in the SPY. How many people here are familiar with the spiders? Okay. The spiders is the S&P 500 ETF. Okay. The S&P 500 ETF. And inside of the SPY, pretty good place. I could do this in the spiders. Let's go ahead and let's go. When I said 3 months out, let's do it. I'm going to go 101 days out. You're crazy, man. That's really far out there. Okay, so what? I'm going 101 days out. And I'm going to find me an option that's trading right around $1. Why am I going to do it for $1? You know, this is the closest one I can find to $1 right now. There is nothing trading perfectly at $1, but that's fine. Okay, and I'm going to work this trade a little bit. And listen, this is the 505 calls. Today is a pretty good down day. It's probably not a great day to work a call, but I'll work this one at 95 cents, hit confirm and send, sends the order. Oh, right. We'll just work the order. If we bounce back up a little bit, I'll get filled. If not, okay, I'll sit tight. But I want you to see first and foremost, look, here's the probability. Okay. I'm trying to sell the order. Probability is what? 94%. Stop. Okay. Don't worry about probability. Don't worry about anything. The first thing I want to actually show you. Okay, I'm going to write this up here. I'm going to go out and I'm going to sell. Okay. In this case, a July, what? 50, I apologize. I'm going to make that a little clear. Let's fix my 5. It's harder to write on the screen than it looks. 505 call. And in this case, I'll collect approximately a 92-cent credit. Now, I know people look at this and they go, it's only 92 cents. Why would I do this and have to wait? I'd have to wait 101 days to make 92 cents. I want to make this example look horrific, but I'm getting to a point here. So I'm going to go out and I'm going to sell the July 505 calls for 92-cent credit. Okay? Time out. Are you going to have to wait 101 days to make 92 cents? No, absolutely not. Okay? What am I going to do? All things being held equal, I'm going to wait 30 days. What's going to happen in 30 days? Okay? See this 101 day, that 101, that means day until last trading day. So you're 101 days out from expiration. Okay? If we wanted to know what the 505 call is worth exactly 1 month from now, how could we figure that out? We could actually look at the 73-day 505 calls. All other factors being held equal, if you want to know what an option is worth, okay, today, look at the price. But if you want to know what an option is worth in the future, look at the same option 30 days into the future. This is even less than 30 days. So from 101 days to 73 days, right? It's about a month. I'm just throwing it out there. And by the way, this is calendar days. This is not trading days. These are calendar days. So let's go look 30 days into the future. Why am I looking 30 days into the future? Because I want you to see the 505s. Okay. Did they decay? Let me ask you something. Did they decay? Yes, they did. And I can turn around then after 30 days and I could buy the July 505 calls. I can buy them back and buy them back for what? Let's just round it to a 40-cent debit. What would I actually make in this trade after commissions and everything? Okay, I'm going to make basically what? 50 cents. It's over 50% return in less than 30 days. How can decay be that good that far out in time? Because it's Ultima. There's actually volatility decay and there's very negligible time decay. People are missing this right now in the marketplace. The skew is phenomenal. The decay is incredible. Far out of the money options. I'm not here to teach you to sell 101-day options and hold them 101 days. You'd be insane. I'm here to teach you that everything that you want to do, you want to be able to create monthly income. Why are you not looking, okay, where the monthly income happens to be? Way far out of the money options, okay? You can use something like the spiders, and I'll discuss that extensively here momentarily, but you can use the spiders. You can make between, what, 50 and 60% inside of like 30 days. How much risk are you really substantiating? Well, I'm going to show you how to control the risk. This, people, this is Ultima. When I say this is Ultima, most people are not familiar with like, how did the option decay that much? Let's do it again. Are we okay so far? Are we seeing that we're making, again, between 50 and 60% for doing nothing? And we're doing it inside of a 30-day window. The market could rally, the market could sell off. Okay, I can show you positions that are making money, positions that are losing money, but the reality is you can do this in a lot of different underlyings, right? Options markets have shifted. We could go into the Nasdaq, right? If you go into the Nasdaq here, look, here's the QQQ, it's the Nasdaq. Look, there is no 101-day option here. Oh no, what do I do? Just to make a quick point, okay? I'm going to go the 73-day and then look at the 45-day and see, would it work there too? Maybe not as well, but okay, it'll work. And again, we'll pull up delta, delta, delta. So I'm going to cruise all the way out here. Look, let's pick an option that is trading right around $1. Here you go. Here's the 414. Okay, the 414 calls. So I'll just scribble this up here really quick, right? You can go out and sell the 414 calls, and you would be able to sell those things for, let's just say, 95 cents. And I would work them at 95, whether I fill or not is neither here nor there, but I'd work them there and sell those for 95 cents. Okay, when there's only 45 days left to buy back the 414 calls. Okay, did they even have the 414s? They have the 415s. They'd be trading for 30 cents. You can make upwards of 60%. Okay, it's ridiculous right now how much premium is there. Ridiculous. You do another one. Okay, let's go into the IWM. It's the Russell. Right, go into the Russell. Could you do this in the Russell? Of course you could. There's the 101-day options. Let's get crazy. Let's go out here. And again, all I'm doing right now is trying to hone into an option that's trading at about $1. Here, I could sell these 235s for 90 cents. Okay. Wait about a month. What are the 235s trading for? 235s are trading for. There you go. Sell them for like 95 cents. Could buy them back for like 40, 45 cents. Still making 50%. Okay. Again, it is, and somebody said, what kind of open interest? It's right on the screen. 23,000 contracts open out here. Okay. 23,000 contracts are open out there. There's liquidity. What do you think my portfolio has in it right now? Right? We're rocking. I mean, listen, this is what this business is about. It's not like, you can't do the exact same thing that you did 5 years ago or 6 years ago. Ultima has changed. It's shifted. And you got to shift with the times, because right now, what do you really know about this marketplace? And I'm being realistic. Like, what do you know about this marketplace? It's volatile. The Fed is going to increase rates. Okay. You don't know anything. You don't know anything about directional bias. All we know, because Walter had come in here a second ago and he said he's confused. All you have to understand at this point in time, we are selling way out of the money options here, like a 120 call. We're collecting $1. We're not waiting to collect the full $1. Okay. We're going to go out there and we're going to make about 50, maybe 60%. We're going to wait 30 days and we're going to do it again. And we're going to do it again, and do it again, and do it again. But I'm not done. Okay. There's got to be a little bit more to it. And I'll tell you exactly what there is more to it. We have to learn that eventually you're going to be what? You're going to be wrong. Okay. You're going to be wrong. But all you have to do is crank out 50%, 50%, 50%. You don't have to wait and make the full amount. Okay. This is about getting in, getting out, not substantiating a lot of risk. Okay. And people always ask, why sell options so far out in time? Typically, traders that sell options sell short-dated options, and they're missing it. There is no edge at all in selling short-dated options. None. You'll get killed. And I want to stress this to you right now. Okay. Even if you look at it, when you sell short-dated options, what short-dated options means this. Look, there's options with 1 day, with 3 days. Let me highlight this a little bit better. Short-dated options. You could sell options with 1 day or 3 day or 6 day or 9 day. Look over here. Okay. See this? That's implied volatility. You're selling some pretty crappy implied volatility. You notice 101 days out. That thing is almost 24%. I don't know. Would you rather sell something for 16 or 24? Do you realize that the volatility further out in time is a monster in comparison? You're getting volatility that it's actually decaying a little bit. It's a marketplace that most retail, they don't see it, they don't understand it. But that's why you're tuning specifically into this website, and you're looking, okay, at the webcast today and what we do here at TheoTrade. TheoTrade is about criteria. It's not about like strategy. Listen, anybody can teach you to sell options. You don't have to listen to me to sell options. You can get on Google and pull up 10,000 different pages on Google that are going to tell you to sell options. How many people are going to tell you exactly what options to sell? How far out do you go? Okay. 101 days out, maybe further is better. If he says go 101 days, why not go 115 days, right? Why not go 130 days? How far out in time do we go? Okay. This is what we do here at TheoTrade. We develop criteria, specifics, okay, the nuances. If you want edge, we'll show you where the edge is. But we actually get into details of like, hey, this is how you obtain the edge and maintain, okay, the trade. But you have to realize the dark side of the force. What's the dark side of the force? This trade that I just brought up, it has an excess of a 90% probability. But what we're missing and we haven't discussed, because again, right now, everything I showed you, it's all coming up roses. What about the 10% hammer? Okay. And I like to bring this because some of you here, and this is where people get a little, those that are experienced. Okay. By the way, yeah, somebody said, why are you focused on a dollar premium? Yeah, it's for convenience. Okay. Dollar is definitely not the sweet spot. It's just for convenience. It's really nice to say it's a dollar. It's a dollar. Okay. But what I want you to understand in this context is 90% sounds great. And I said, if everything's coming up roses, but 10% of the time, like when you have a 90% probability, the first thing you should think to yourself, you kind of put your head down and you go, okay, what happens to me the other 10% of the time? Okay, don't worry, you're going to find out. When you trade high probability like this and you're wrong, okay, they come after you. Okay, come for you. And anybody that has done this, and again, how many people here have sold options premium? How many? Say yes, 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 yes. No, 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 no. Just curious. So you sold options premium. And what happens? If you sold options premium anytime in the last 20 years, you probably learned to do a trade. And by the way, this comes from experience at the brokerage firm, but if you traded and sold options anytime in the last 20 years, you used a strategy almost unequivocally called the iron condor. How many people have ever used an iron? Iron condor. What is the iron condor? It looks, okay, like what? Like this. I have to actually look at the little video over there. Iron condor looks like this. That's the risk graph. You sell an out of the money call, then you sell an out of the money put. Then you buy an out of the money call, then you buy an out of the money put. Okay. Anyway, you sold an iron condor. You're selling both sides of the marketplace. And what happens to people when they learn this? Okay. Everybody needs to understand this. If you've sold an iron condor in the last 20 years, okay, you got roped in because it's a bunch of crap. It really is. Because basically what happens is you sell the iron condor, and the first time you do it, you make money. In fact, you took a class on how to sell iron condors and you paid $500 for that class. And they told you how to sell an iron condor. And here's all the criteria. And you make a little money and do a little dance and make a little love and get down tonight. And the very first time you actually followed their criteria, you made money. And you go, holy crap. I did an iron condor and I did it in the SPY. That's the SPY. And I made money. Of course you made money. The trade has a 90% probability. Do you think you were going to lose money right out of the gate? The market is far more evil than that. So the first time you did a SPY iron condor, you made money and you did one contract. Then a couple of months later, you do another one. And guess what? On the next one that you did 5 contracts in the spider and you made money in that one too. By the third month, you've already stepped up and you're using the product called the SPX. Anybody know the SPX? The SPX is where new traders go to die. I traded in the S. I know the S. So the SPX is what I term the mother of all products. It is evil. Okay. The SPX is exactly 10 times the size of the spiders. So 2 months ago, you were trading one lot in the spiders. You're like, Captain, one lot rides again. 2 months later, you're already trading in the SPX. So it's a big boy trade. But on the third month, you made money. Why? It's a 90% trade. So now you've had 3 months in a row, and you've actually made money. Okay. Everybody needs to start small, but after 3 months, you build up your contract size. Anyway, 3 months in a row, you made money, and 3 months in a row, you haven't been touched. So on the 4th month, you go into the SPX and you do 10 contracts. You're like, okay, you're feeling like a big dog out there and squawking your feathers maybe a little bit. So in the 3rd month, you go out there and you do your 10 lot in the SPX, and the market is baiting you. It's a come on, come. As soon as you put the 10 lot on, train wreck. Your losses, okay, exceed the gains. You didn't just wipe out the previous 3 or 4 months of gains. You also took with you half of your trading account. And every time that somebody hears this, they go, holy crap, how could he possibly know that? By the way, it always waits at least 4 or 5 months. It lets you build contract size, build confidence. I feel very confident, just confident enough to step up my contract size. And the market goes, come, join me. Okay. It's like rushing towards the light. You're not supposed to go towards the light. You go away from the light. I don't know how that one came into play, but it's like, I can see your account. Of course I could. You know how many times I've seen this crap? right? I spent 15 years in the brokerage world. I watch people get annihilated in iron condors, people calling up in tears. This is not like something you enjoy. You just have had the experience. You can't survive in an iron condor. And then I love it. Somebody said, been there, done that, guilty. If you've traded an iron condor anytime in the last 20 years, you've experienced this unequivocally, because there's no risk management to it. You had nothing. What'd you do? You think, I was going to get out before the market moved. Really? You're going to get out. You're faster than the market. You're going to wake up in the middle of the night. Okay. Something happened around the world in the middle of the night. Boom. The market absolutely got crushed. Where are you? Okay. By the time the bell goes off, ding, 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 down 600%. It's over. It's over before it even started. The bell goes off. Right. The last really good, I mean, there's been a lot of them. There's been a lot of really big events in the last couple of years that shifted the market. People got annihilated. Okay. By the way, after you did this, then what did you do? You thought to yourself, there's got to be a better way. There's got to be a better way. So you took a $500 class and you learned about the iron condor. Then you took another $500 class that said, I can fix the iron condor. I know I can fix the iron condor. Trust me when I say this. Fix is a really dirty word in trading. You want to see like the nastiest side of the brokerage business. And by the way, I'm a total cynic, because you watch people's accounts for 15 years and tell me you're not going to be cynical. In the brokerage business, okay, good trades gone bad. People just, especially when they try to fix trades, just like get out a shovel and just keep on digging. Okay. Anytime you're fixing a trade, there's no if, in, or but about it. Anytime you're fixing a trade, I want you to think about this. You're adding more good money to an already losing position. What's the first thing they teach you in this business not to do? What is the first thing in this business they teach you not to do? Don't do anything stupid like add to a losing trade. You go, I'm not adding to a losing trade. They told me I was fixing a losing trade. I'm like, oh, geez. Okay. This is the degeneracy of trading. Okay. Fixing is the same thing as adding money to a losing trade. Yeah, some fixes work, but the very notion of fixing just throws more good money after bad capital. Just the bottom line, we don't fix. Listen, when you have a bad trade, it's the same thing as this. Take a car, and I love this analogy. Take a car, drive it off of a cliff. Hopefully you're not in it. Take a car, drive it off a cliff, and you bring that car to a body shop, and they go, what am I supposed to do with that? It looks like the car went off the side of a cliff. You go, it did. I want you to fix it like it was new. And they go, no, it's totaled. It's a piece of crap. And that's exactly what you should do with your trades as well. Listen, it's a piece of junk. Let it go. You need to learn how to do this correctly. Position structure. Okay. Position structure. So we're going to talk about selling options premium. Now I'm going to show you a little bit of the full Monty. And when I say the full Monty, okay, listen, what I have on in my account right now is pretty much the full Monty. I have premium selling positions. Okay. I've got a lot on. This account's producing about 11K of P&L today. This one netted out. This is P&L open. I look at the Tasty Works a little different. This is P&L open. This is a much smaller position, but this is actually an IRA. Okay. And by the way, you can do anything you want. Never allow a brokerage firm to tell you that you have levels of approval, because there are no levels at certain brokerage firms. Remember that. Now I'm going to show you a full options position, full Ultima. Okay. The first thing I want you to realize, the first thing I want you to rationalize, okay? I don't mind talking about the spiders. I think that the spiders are a good product for a lot of people to learn in. They're a $450 product. So just bear with me here. When I say product, I don't care what you trade. I really don't. But let's go in here and let's actually put in SPY. And the SPY is trading right at, let's say, 450. So I'm going to come all the way out here and I'm going to sell, okay, some 505 calls. But let's say the market rallies a few days later, I'm probably going to sell some probably 20 calls. Before you know it, we sell off, and I've probably sold, okay, a couple 490 calls. All right, that's on the call side of it. Why am I just selling calls? Skew is awesome right now. The skew on the puts is huge by huge. I'm going to turn around and I'm going to sell some 350 puts. For those, ooh, by the way, the calls, these things will be trading like a buck. These puts, these things will be trading for $2 or $3. I'm probably going to be able to sell, okay, the 330 puts, collect another $2. Before you know it, okay, I'm going to have a bunch of different positions. I'm probably going to sell 360 puts. Do you realize how far out of the money I am? 350. That's $100 out of the money. $100 out of the money. Okay, that's the nosebleed seats. But you do realize what I just did, and I'm just scribbling it up here right now. I just want you to get a feel, right? I'm selling a bunch of puts and selling a bunch of calls, and immediately people go, I don't have the option approval to do this. Yeah, I don't care. Yes, you do. The next thing you're going to say is, I don't have the capital to do this. Yes, you do. I don't care, right? You can do this even with $2,000 in your account. You go, no, I can't. Yes, you can. You just have to learn the proper way to do it. You have to circumnavigate all the different margin restrictions, and you can't let your brokerage firm tell you there's a day trading margin rule because there isn't in certain products. You learn the ropes. What you want to focus on right now is this: risk. Don't worry about all the nuances. I'm serious. Push away all the nuances. Worry about the risk. What's the risk? If you went out and just did this, and you just sold a bunch of puts and sold a bunch of calls, you are a sitting duck. And sooner or later, what happens to the ducks? They start quacking. One day you're going to wake up and that marketplace, markets can rally pretty good. I mean, we had one of the biggest rallies we've ever seen recently. I mean, literally, okay? Ever. But you can turn around, right? And what? You can get absolutely killed. By the way, you can absolutely be down 600% in iron condor. If you have $10 wide iron condor and you collect $1 for it, okay, and all of a sudden it's worth what, $6 or $7, you lose 600%. Here's a 450, a market at 450. One day you're going to wake up, okay, there's geopolitical risk right now. There's all kinds of risk. The upside doesn't really scare me. It's the downside, okay? You need to have fear, right? And if you don't understand what that means, you haven't played in this business very long. The fear is this: one day you're going to wake up and we're going to be down here. And when we do, the value of these puts is going to explode. You'll never be able to recover from it. The thing that kills people that sell options premium is the market can move faster than you can react. It's always going to be able to move faster than you can react, right? I don't want to tell you something that you haven't figured out already on your own. But what you need to understand is, okay, what happens if we could mitigate the downside? When I say mitigate, what happens if we can use a hedge? What is a hedge? It's risk reduction. Because one day you will wake up and we will be down here. And one day you have to understand that that's going to be severe. Enter, okay, the hedges. One of the most important concepts initially is high probability. Got to understand high probability and the right options to sell. But this is unequivocally the most important portion of Ultima, okay? Enter the hedges. The hedges, what are they? There are 3 primary hedges we use. The first one, okay, is called a risk twist spread. We also call it an RTS for short. The next one, okay, is a VIX vol spread, also called a VVS for short. Last but not least is a gamma iron, okay? There are 3 hedges that we can select from. What are hedges? They are risk mitigation tactics. Allow me to explain a little bit, okay? First and foremost, I think that the easiest one conceptually to understand is a VIX vol spread. Conceptually, okay? What is a VIX vol spread? Right here is VVS. For those of you that understand VIX, VIX is a very simple volatility tool. When the market goes down, VIX goes where? Up, right? Not always, okay? But if the market has a very serious, severe sell-off, which transpired earlier this year, where did VIX go? VIX shot through the roof. VIX was clear into the mid 30s, right? So when the market goes down, VIX goes up. How about we place a very, very small trade in VIX, just a very small trade. What is that trade going to cost me? Nothing up front. You can even achieve these trades, okay, for literally no cost up front. You can actually sell one product, to buy another product. I don't want to get into too much detail on that front. The VIX volatility spread, a very, very small trade, will explode in value should the marketplace tank. Now think about this. The market sells off and starts to spiral out of control. The VIX explodes, okay? And we have a hedge. How are we going to use this? Well, let's now put it all in context. The SPY is trading right here at 450. Do we own the spiders? No. Do we want to own the spiders? No. It's $450 product. It's going to tie up a huge amount of money. We're going to go out, okay, and we're going to sell calls of the 505 variety, okay? We're going to sell, for instance, 515s. I mean, we'll even be able to sell, for instance, the 530 calls. All we're doing here, collect some premium, collect some premium, collect some premium. Simultaneously, we're out here selling, for instance, 350 put. That's going to be trading for at least $2. Probably going to be selling, for instance, a 330 put. That thing will be trading for at least like $1.50. Okay, I may even be able to sell, for instance, 360 put, collect another $2. That right there, what am I doing? I'm selling a few calls and I'm selling a few puts. And people go, it looks like a lot. That could take me weeks to put on. That's okay. I just want to make a quick point that you're putting on a couple of calls, putting on a couple of puts. You want to know why? Because it doesn't tie up any more margin. If you sell calls and then sell puts, it won't tie up any more margin. So it makes sense to sell both sides of the marketplace. What do you want to have happen? Well, you want the market to stay somewhere inside of this range. It doesn't necessarily happen that way. Meanwhile, you knew from the get-go that you had to have a hedge. You can't survive without a hedge. So somewhere right in here, okay, you put on a VIX vol spread. Why did you put the VIX vol spread there? Because that tiny little trade, okay, is enough to mitigate exposure if that marketplace comes down fast, okay? You put a little ticking time bomb to explode, all right? The explosion is enough to give you cover to actually mitigate exposure on the puts that you have sold. People always ask me, when do you put hedges on? Always. You can't survive in this business. You think you're going to be able to time geopolitical risk? You're going to wake up one morning and we could be at war tomorrow. You could wake up one morning, oil could be up $50 with an event, all right? You cannot substantiate when the proverbial risk is going to hit the fan. This is what we term inventory management, okay? These trades, they're put on over time. I don't want you to think of yourself as a trader. I want you to think yourself as an inventory manager. You're just trying to churn through inventory, right? Put it on, take it off, put it on, take it off. Sometimes, you know what? If you were an inventory manager of apples, not Apple, but apples, actual apples, you know, apples. Sometimes apples go bad. You're like, oh, inventory, chuck it. Yeah, inventory, chuck it. Some things are going to go bad. What do you have? You have a hedge. Because sooner or later, one day you're going to wake up and this marketplace is going to come tearing down. And when it comes tearing down, see right here, what you're going to have on is this tiny little trade, okay? And that tiny little trade, that VIX vol spread, will actually provide you cover enough to actually mitigate, not all the exposure, but some of the exposure. You have to learn these hedges to survive. You got to learn that I don't care if it's once every 3 years this marketplace crashes. Whenever it does crash, you're going to have cover. And that cover is going to be enough to be able to mitigate the exposure to the downside. And when you talk about the upside risks, what a gamma iron is for, okay? The gamma iron actually looks something, okay, like that, where for us to actually burst to the upside, you have to make money in the gamma before you can actually lose money out here. People, that is inventory management. This is what Ultima is about. And I'm telling you right now, this is what you want to do, okay? This is what you want to do. This is what you need in your life, because we're raising interest rates. You know, one of the most famous sayings about the Fed, the most famous saying about the Fed is, don't fight the Fed. If you're long markets right now, you're fighting the Fed. If you're trying to predict what markets are going to go up and what markets are going to go down, you're fighting the Fed. It's almost impossible. You have geopolitical risk stacked with inflation, stacked with what? Okay, a Fed that's raising interest rates. They're already talking about going into a recession. When was the last time we talked about a recession? Yet the interest rate hikes are coming. We're going to hike interest rates right into a recession right now. What do you think is going to go on? The only thing that I can actually handicap right now is simply this: volatility. As long as there's volatility in this marketplace, this is going to work. Okay. This is why you want to sell premium. You can now sell premium in accounts, right? Even accounts under 5K. $2,000 is the bare minimum. Okay. Produces positive theta decay, can enhance existing positions. If you do have stock positions on, you realize you could actually sell inordinate amounts of options premium against those positions. Okay. Provides a high probability of success. Most of the time, you're not going to have to sit here and watch the position constantly. Okay. You never need to buy or sell the stock. I'm not asking you to buy or sell stock. If you want to buy or sell stock, that's fine. That's up to you. Okay. And more often than not, listen, you could be wrong on market direction and still produce profitable trades. I haven't talked to you about direction because it's not conceptually part of this. Like, you don't necessarily need to be right over time. That's what high probability trades with hedging, okay, takes into account. And again, I can't stress to you this enough. Selling premium, okay, can bring in consistent returns. And at the same time, we're mitigating risk. If you want to learn how to do this, minimize your risks the right way, we're in a moment, we're going to discuss criteria. Okay. But here are a few live trading examples. And I say examples. Okay. What I'm about to show you is variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account, and it can be done inside of a retirement account, right? I'm going to throw this up here and just explain what you're seeing on the screen. I'm going to show you, okay, all the trades that I did in an Ultima portfolio all of last year. So I'm going to show you the entire results for 2021, because everybody goes, I want to see the results. You'll see results, okay? I think there's one or two losing trades in the entire year of Ultima. I did not last year use my hedge even one time. I didn't use the hedge. By the way, this year thus far, I haven't used a hedge either. Okay, I'll show you everything. What you are looking at right now, and I'll explain this. Okay, I did the first one on Tesla because it's kind of a fun one, but this is the opening trade, the closing trade, right? To open to close. There's the underlying, there's the expiration I use, the exact strike. It's a call or put, the price I open the position for, the price I close the position for, and the return. Does that make sense to everybody? Okay, where did this come from? That came from right here. If I go into my monitor tab, right, I pull up account positions and I type in something like spiders. Okay, let me actually isolate to one account. So I obviously have a lot of accounts in here. So I'm going to go back 300 days in the spiders. So you're going to see everything I did in 300 days in the spiders. Look, to open, to open, to close, to close, to close, to open, to close, to open, to close. Okay, all I'm showing you is this. There's a lot of opens and a lot of closes. All I did was copy and paste it into the slide deck to make this a little easier to understand. It's a lot to go through all of the trading results for all of 2021. What I am showing you is these were trade alerts. These are not just trades that I did. By the way, every single trade that you are seeing was executed live, was executed inside of my portfolio, and was sent out, okay, in our TheoTrade, okay, Ultima portfolio. We have a portfolio where we do trade alerts. For instance, Tesla, here's a short call. Opened it for $4.50, closed it for $1.90, 58% return. Now, if you understand that, here we go. Bond short put, timeout already. A bond? How come you're selling stuff in bonds? I don't know, I like bonds. Is there any problem with bonds? Do you have a problem with bonds? I don't. I made money on it, right? Sold it 14 ticks, so closed it for 6 ticks. Okay, another bond short put, 53% return. IWM short call, 62%. IWM short call, 53%, 76%, 60%, 50%. By the way, so far, I showed you Tesla, but really I trade IWM, maybe a little spiders, okay? Some bonds in here, right? 51%, 57%, 49%, 50%. And again, we're just toggling through. Here's a QQQ short call. Now we're in the Q, 62%, 53%, 50%, 50%, 54. Okay, I'm just going to scroll through very briefly. Look, there's a loss. It's a 19% loss. It happens. And I don't ever want to like shy away from, there's not too many losses this last year. These are really high probability trades, pretty mellow year overall. Okay, I'm just scrolling through again, 47%, 51%, 50%, 51%. Okay, we're ripping through right now. We're all the way up now to what? April. Okay, I know this gets a little boring to see. IWM, bond short put, Tesla short call. Okay, Amazon. Ooh, we actually switched it up. Okay, QQQ, more Q, SPY, right? ES short put, timeout. At this point, okay, at this point, I wanted to reiterate something. I stepped up into the ES. What's the ES? It's the options on futures. And the reason I stepped up is I wanted to get people comfortable with the size of spiders. And then I traded an ES because an ES is exactly 5 times the size of a spiders. People say, well, should you trade one contract trade? You can, but after you get bigger, you move into a different product. You don't do more contracts, you just move into a different product. And the reason you do that is it'll save you a lot on commissions. Okay, so now you can see 50% returns, 50% returns. Okay, all of these are which are live trades. After I get people comfortable, we've moved from spiders, then we moved to the ES and we built up a little bit of size, right? Okay, then we're actually going to switch up strategy a little bit. This is Ultima. This is actually what we term a Christmas tree spread. The Christmas tree spread, and I have several of these on right now. Okay, if you're kind of curious what a Christmas tree spread is, it's a ratio trade. It's a 1 by 3 by 4 by 5. In this case, it's a variance of a Christmas tree spread, 85% return, one trade. Okay, this is over a $2,000 P&L on one trade. Because I know it doesn't make sense because you're like, well, I collected a what, $21 credit and closed it for a $3 debit. So if you sold something for $21 and covered it for $3, okay, there's a ratio in here, but this trade makes over. Okay, and they're good. It's not a calendar spread. This is just nothing more than a Christmas tree spread. And this one actually collects about $2,000 of credit, right? QQQ, TLT, ES. Again, I'm just ripping through. And by the way, I want to show you 19% return, not exactly huge, but it happens. Okay. There's good trades, not so good trades. We're all the way now into October. QQQ. There's another Christmas tree spread, $22 credit. Closed it for what? Like basically what? A negligible debit in here, 92% return. ES short put, ES short call. Okay. Listen, this doesn't take a huge amount of time, right? Doesn't take a huge amount of time. By the way, I don't trade SPX here. Don't even bother asking because I don't trade SPX here. You won't survive the SPX, okay? Retail clients don't belong in the SPX. It's not a safe place for you. If you don't have a lot of time, okay? Each and every trade that I showed was live at TheoTrade. Every single trade. The trade alerts are being sent out to you, okay? When we do a trade, we send you out the trade. Selling premium like this is also incredibly hands-off. Like it's very part-time. I don't want you to think you're sitting in front of your computer screen. So maybe a fraction of your time is enough to see some results. This is a great time to be able to do this. Okay, if you're still working, do it. All right, learn a new skill set. It's a great way. And I left us in here to emerge from the pandemic stronger and better financial shape. The pandemic is possibly still with us. Now it's all about geopolitical risk. This is a good time to learn how to sell some premium. I don't care whether you want to focus on the Fed, whether you want to focus on the pandemic, whether you want to focus on geopolitical risk, whether you want to focus on inflation, okay? We are in one of the most intense marketplaces I've ever seen in my career. And right now, the irony is nobody seems to want to learn anything new. They just want to go out and try to do what worked for them in the past because over the last year and a half, you could have thrown money at the market. As long as the market goes up, you made money. We've been selling premium for the last 2 years. It's worked phenomenal. And we haven't made money because the market's gone up. We've made money because we've sold premium, okay? Been very strategic, mitigated risk. It's what works right now. Listen, what our members are saying, Kevin Burks, absolutely love this freaking website. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. I can't get any work done. I actually like that one. Here comes that short I'm waiting on. Jim said, I bought 4 SPY contracts, $3, closed it out for $6.57. Could have waited. Okay, but that's bit me in the past. And others in the chat room, okay, this is an example of why your TheoTrade membership pays for itself. Okay, TheoTrade is the best by far. I've been with the rest of my trading career, no questions asked. Listen, characteristics of selling some Ultima premium. One of the things that you have to focus on, again, you're never buying or selling the stock. You can tailor risk to precisely your comfort level. Don't worry about the size of the account. You're never going to use a stop order. I don't even want to hear the word stop order. A lot of people don't know this. You realize that the New York Stock Exchange banned stop orders a decade ago? A decade ago, the New York Stock Exchange doesn't even accept stop orders. Yes, E-Trade will take them and TD Ameritrade will use stop orders, but the exchanges themselves don't even allow them anymore. Okay, you can vary time frames, minimize your risk, probability of profit high. Listen, it's the perfect strategy to enhance one stock portfolio. You have to realize the technique that I'm actually talking about here can be used to amplify returns of an existing portfolio. It's also a great tool for those just looking to seek to build a smaller account. Okay, last but not least, new products. New products allow for the sale of options in nearly any account size. And that's one of the biggest hangups that we used to have about selling premium. You couldn't do this in the past in a small account, but now you can. Now, building a portfolio of options. You don't want to let options portion of this intimidate you. That's the part that like everybody gets really hung up on. Like, oh, I don't know if I can sell premium. Okay, do not let options intimidate you. Selling premium can be done for minimal credits, but also we're going to teach you how to take minimal risk. But the sale of premium, it's like learning to use a huge power saw. You know, if you're gonna go out and build a house, you know, you're going to use a hand saw and cut through every single, 2x4, or you're going to use probably a table saw. You know, okay, but if you don't know how to use a table saw, you probably lop off a couple of fingers. Options, in my opinion, are the exact same thing. Options can be the quickest, the fastest, the safest, easiest way to get where you want to go in the stock market. But if you don't know how to utilize options correctly, you're going to lop off a couple of fingers. Listen, you can sell Ultima premium. If you have limited experience, like as I said, don't let the options portion of this intimidate you. You're going to need these strategies for the foreseeable market future. And we can show you how and when to sell premium. It does take a couple of hours to do this. What we do here and what we've done here at TheoTrade is create detailed recipes, okay, for every strategy, including Ultima premium selling. And when I say like detailed recipes, it's the same thing. You wouldn't bake a cake without a recipe, unless of course you've done it like 20 times, right? I mean, if you've baked a cake 20 times, you're probably not only baking the cake without a recipe, you're probably even refining your recipe for that cake. You need a recipe to be able to put on Ultima. You need the recipe. You don't know how much selling of premium versus how much hedge. Like these are the items. Like, look, this is what you need to know to successfully sell Ultima premium for a living. What underlyings, stocks or indices, make the best Ultima premium selling candidates? Like when I say that, I mean like, oh, you saw spiders, IWM, QQQ. I moved into the ES options on futures. What else? A couple of bonds. You don't have to necessarily do bonds. Okay. The irony is, I showed you Tesla. You didn't see any Tesla trades recently. No, Tesla won't fit recently, right? Why? Because you need to know precisely the right volatility to seek out. You gotta have the right volatility. Too much volatility, you're dead. Too little volatility, you're dead. Volatility has to be within, okay, a sweet spot. This is what criteria, okay, defines. When I say criteria, there is literally a recipe book specifically for Ultima. Step 1, step 2, step 3. You got to know exactly what volatility to be able to seek out. Okay. Next, you got to know what options expiration do I select. One thing, I jumped in here. Okay. I jumped in here a little while ago and I brought up spiders. There's 1 day, 3 day, 6 day, 8 day, 9 day set hut hike. Look how many expirations are in here. I immediately jumped 101 days out, but should I do 101 day, 136 days, 86 days, 73 days? Which one do I use? Right? You can see I've got positions on in here too. Like I don't hesitate to show you everything. When I say I show you everything that we do here, it needs to be full transparency. Nothing is held back at TheoTrade. And that's why I say, listen, this is a day that happens to be a decent day for me in the market. By the way, that's one account. I had them aggregated earlier, so I'll aggregate them again. We started this about $11,000 now of P&L. We started this and we were up about 8 grand. We're up about 11 grand. That's in one account. You're going to see days where I'm down. Okay. It's the nature of the beast. You got to understand if somebody's not showing you everything, every P&L, what's the account worth? Okay. The hell good is it? Not going to do you any good. Okay. Working positions. I don't even want that position in here, but everything that you do needs to be explained in the greatest detail. Every time I send out a trade, you need to know I'm executing the trade. I don't mind showing people this. Okay. You'll find this maybe good, maybe not so good. When I send out a trade these days, check this out in XLU. I want to show you. Here's my position in XLU. I sent this trade out, okay, last week. You want to see some contract size? That's us, right? Right now, not everybody here at TheoTrade necessarily trades heavy size or live, but listen, almost 5,000 contracts were done at each strike in here. It's almost a 10,000 contract trade, okay? This is a product that can absolutely support it, but I wanted to show everything we do here is transparent, and that's critical. What should be the delta of the option you sell? You got to know exactly what delta, okay, to sell. You got to know which options to buy against it, right? So not only do I have to sell X number of contracts, then I've got to buy X number of contracts. It's not like a complicated ratio, and I don't want to get you deep down the complexity, but you do have to know. Sell 3, buy, for instance, 1 VIX volatility spread. Sell 4 in the spiders, buy 1 VIX volatility spread. We have to know that. How do I build the position? When I say how do I build the position, I mean literally like drawing a distribution curve. Sell a couple here, sell a couple here, hedge in here, make sure that we're actually allocated very nicely. Again, this is the stuff, like how do you actually build a position? Okay. Do I need a large amount of capital in my account? No. By the way, I threw that in there because it's the number one thing that comes up. And I'll tell you right now, I'm going to show you my Tastyworks account really quick. I have quite a number of positions. Forget about the SPY position. I have quite a number of positions right here. This is $9,000 in margin, but that is also an IRA. In a normal margin account, it would only tie up about $5,000. It's about half that. It's even less. It's about $4,500 in margin. Okay, that's actually a big position because how many options? I got 1, 2. Okay, there's 2 options here. That's 3. Another 4, another 5. So that's 9. 9 plus 3 is 12. Is 13. There's 14 option contracts in here, and in an IRA, it only ties up $9,000. Okay. So don't tell me you can't do this in an IRA because you can, right? What's the right amount of risk for me? That's something we can help you fine tune, right? What are the percentage returns supposed to be? Roughly 50%. You're supposed to make 50% move on, 50% move on. I'll tell you that one right off the top. How do I protect myself from market crashes? You got to learn VIX volatility spreads. You got to learn risk twist spreads. We even have a new one. It's called an inflection point spread. Let me show you what we do precisely here at TheoTrade. TheoTrade creates recipes in trading, okay? Recipe in trading. Trading, you're going to find out it's all about answering the what ifs. You're going to find out like, hey, what might be a good stock or ETF candidate to do this in? The correct option expiration cycle. How much capital do I commit to generating premium? The strike prices that I sell, the options that I buy. How can I limit my risk? What we do here is we answer those questions. We build recipes with definitive criteria. They're checklists. When it comes down to it, what we have built here at TheoTrade are checklists for each strategy and each unique variable that you're going to encounter. When you think about this, why a checklist? The logic of the checklist comes directly, okay, from a pilot. And when I say the logic from a checklist comes from a pilot, I was young. I started traveling extensively, traveled all over the world, okay? I traveled back and forth from Scottsdale, Arizona to Chicago almost every week. We traded in Chicago. We lived in Scottsdale on the weekend, and I went back and forth, right? Spent a lot of time on aircraft. Then when thinkorswim hired me, they said, hey, you can still live in Scottsdale. I went back and forth Chicago to Scottsdale for forever. I've traveled all over the world, though, because we opened offices in Singapore, Australia, been everywhere. Every time I'd sit in a plane, I'd always sit in the front of the plane and be like, hey, and like literally the pilot's going through the checklist in a pre-flight. And I was like, that'd be an awesome idea if I could actually build that into finite criteria for trading. So we did. We literally, I mean, when you get into like a 737, they don't just like, throttle up, let's take off, get seat belts. They have a really finite checklist. So do we. And that's actually the logic that I built it on. I tried to come up with every single variable imaginable. What can happen to you when you're in a market? You think about what's the right probability for the trade? How many option contracts do you do for the account size? When do you close your premium sell? What if the stock sells off big? See, it's not just about getting into the marketplace. It's also, once you're into the marketplace, what can happen? The market could sell off big. We could rally huge. There's dividends coming. There's expiration. Oh my, what happens if earnings? Okay, what if we rally massively? Can I fix a losing position? You're going to find out there's like a how, a when, a why, at what price. It's just the beginning. Seriously, it's just the beginning of the variables you're going to face while selling Ultima options for a living. You know, you can read what selling Ultima premium is. Maybe you even have built a few trades in the past, right? And when I say you can read about it, listen, you can Google right now. As I said, you want to learn to sell premium? 10,000 pages will come up in Google about selling premium. None of them, okay? None of those pages have TheoTrade's recipe for success. 20 plus years trading experience. That is just me. There are 7 other full-time instructors here at TheoTrade. I had access to client order flow for 15 years. I've seen what works and what doesn't. We've viewed and studied millions of accounts. By the way, I say we, myself, Jeff Bierman, Blake Young, Brandon Chapman, just those individuals that work here at TheoTrade, they also stem from thinkorswim and TD Ameritrade. And I ran education for 15 years, okay, at thinkorswim and TD Ameritrade, which is a firm, we had the largest option order flow, okay, in the entire industry. Criteria becomes the recipe for success. The following strategy, which is Ultima premium selling, and the corresponding criteria, it requires the utmost attention to detail, okay? We don't just put checklists together for nothing. Spend time in there. We spent years fine-tuning this trade setup and the criteria, okay? When you approach the section on criteria, you follow the steps to be able to build a trade. We built a full-blown 5-hour course on it, okay? It's not $500. I want to throw that out there right now, okay? Before I even explain what TheoTrade is, before I explain to you how we send out trade alerts, before I explain to you, you can email us for support. You can bounce trade ideas off of us. We encourage it. Before any of that, let me get through what we actually do instead of just a course. So initially, I put together a 5-hour course specifically, okay, for Ultima income generation, meaning that it teaches you everything from structuring the position to managing the risk to opening and closing, like soup to nuts, how to get in, how to get out with all of the criteria. That 5-hour course, it's already archived. When I say archived, it's available. We built a site, and the site it's very similar to like Netflix, where you can actually go through and search through different titles. I'll show you in a minute, okay? You can click on a title and you can start streaming the course. You can also download, okay? You can download the entire course if you so choose onto really any device, whether it's Android or iOS, or you want to stream it on your computer. You can even watch it on any mobile device, that's fine. We actually have our own mobile app, okay? The class slide deck that includes all of the checklists, the entry and exit criteria, and not only getting in, but getting out is available immediately for download, okay? And as I say, you know, it's not $500. Listen, I am more than aware. I've watched the education industry, you know, for decades, and everybody goes out and they sell a class for $500, and then they sell you an indicator for $500 that goes with the class. Before you know it, these two are obsolete. Got to take another class, another indicator, maybe another class just to learn to use the indicator with the original class, and it's obsolete. It's not what we do here at TheoTrade, okay? I'm going to make this very, very clear. TheoTrade is designed, okay, to be that last stop in your education period. And I mean by that is you can go out and you can spend $40,000 in education. It will pale in comparison to what we're capable of doing here, right? We went out, we didn't hire a bunch of people that have any sales experience. Everybody here is a trader for a minimum of 15 years, period. You can email us for support. We answer trade-related questions. Most of us held brokerage licenses. I was actually a registered investment advisor for many years and managed as much as $400 million early on in my career, okay? Several of our guys actually come from the hedge fund side of the industry. What do they do now? They trade and they answer emails. okay? And each of them actually trade, if you would like, in front of you every day. We can stream to you in real time what we do on a day-to-day basis. When I trade, my trades can actually go out to you via text message. If you can't receive text message, we also have push notification. I'll explain all of that. But the one aspect that I want you guys to understand before I explain a little bit about TheoTrade, okay, is that we don't sell classes here at TheoTrade, that it's all encompassing. That if you want to come and you want to learn this business, we do not let you take a class and then just give you a pat on the butt and say, good luck, okay? Because that crap does not work. We will ramp you up from absolute basics to the most extreme. There's some time involved on it. Watch the classes, put in a little bit of work, okay? This is not going to be like learning a new language, but there's a little bit of work. Obviously, this class alone is 5 hours. Maybe you need a little basics before that. We give it all to you, okay? Then you can see everything we're doing. When I say everything we're doing, we give you the full Monty. We have all the portfolios right in front of you. I mean, when I say we have the portfolios, listen, this is TheoTrade, okay? This is TheoTrade right here. This is actually streaming live right now. When I say live, okay, we're live. This is actually the chat room. This is, one of our instructors streaming live. I paused it. We have like start here menus though. So to get you ramped up, all of this is included, all right? We don't just have one class. We have hundreds of classes for you. You get access to them for day one. And I tell everybody this right up front. Why? Because, you go out and you pay a couple $100 for a class and you have to pay another couple $100 for a class. It's all crap. Because again, people want to string you along. We want people that want to trade. Why do you think we're doing 10,000 contracts every time I hit confirm and send? 10,000 contracts go out behind it. We know it, right? Let me show you a little bit about this class, and then I'll actually show you everything that's included in TheoTrade. First of all, the Ultimate Income Generator course curriculum. You're going to learn how to generate premium selling techniques, right? Okay, how to build a portfolio of high probability trades that generates monthly returns, regardless of starting capital, okay? You're going to learn all of the detailed entry and exit criteria. I put the most weight here at TheoTrade into this. The entry and exit criteria is where we spend time. It's where we spend money, okay? That's the emphasis. Anybody can learn to sell premium, okay? But you can't learn the entry and exit criteria. That's what people come here for. They're going to learn a little bit about option Greeks so you can manage your position via one number, okay? Then we're actually going to learn to use a risk array. This to me, I've done a lot of classes here at TheoTrade. That's the coolest thing almost in any class. The risk array is incredible. Once you learn how to use that beast, you can see what if the market goes up big, down big. You're going to be able to see the forward future. Imagine that you were playing a game of chess and all of a sudden you could see 15 moves ahead of everybody else. That's what the risk array allows you to do. It explains it in this class, how to properly allocate in a way that reduces the risk, okay? Discover risk mitigation techniques and learn how to hedge the most extreme market environments, okay? We want you to be able to sleep at night is what that comes down to. And you're gonna learn how to sell premium in small accounts. A big portion of this class is small accounts. A big portion of this class is retirement accounts, innovative new trading vehicles that have never been available before. There are a lot of products that you can have very small amounts of capital in your account. You can get a lot done, okay? This is Ultima. Okay. And as I said, it's not $500. So don't freak out on me. In addition to Ultima, we're also giving you the inflection point spread class. Markets got so wild and so volatile over the last few months. I actually stacked an additional class in here. It's called inflection point spreads. It's a variation and a twist in Ultima. It's a 3-hour course. Okay. It's yours. It's archived. It's ready to go. I only recorded this a few weeks ago. The class slide deck with all the entry and exit criteria is available for immediate download. The cool thing about inflection point spreads, it lets you do these trades even in the most wild of markets. Markets could be crashing. You're like, yeah! Why am I making money with a down market today? The answer is inflection point spreads, okay? That's why I'm making money in today's down move, inflection point spreads. Listen, okay, learn to sell premium and hedge risk in one transaction. Create high probability positions that generate monthly returns. Okay, discover how to hedge existing positions in the most extreme environments. Sounds a lot like Ultima because it is Ultima. But what we did is we took detailed criteria and twisted it for an inflection point to mitigate risk. But the cool thing is the inflection point spreads allow you to put on an entire position in one easy trade. You're never going to be caught off guard by risk, okay? And you're going to find how many inflection point spreads you can safely allocate for any account size. Additionally to this, and I throw this up here right now, we're a completely riskless trade. It's a 90-day money-back guarantee. If you're not satisfied, by the way, you can sign up for TheoTrade, okay? We don't do memberships. All we do is this. TheoTrade is 3 months. For 3 months, okay, you pay $297. I'll show you in a moment. Pay $297 for 3 months. Anytime in the 3 months, if you don't like it, we just give you your $300 back. We have over 6,000 people on the site. Why? Because we do this. By the way, you don't have to call us, okay? There are no stipulations whatsoever. We don't care about any of that. What do you mean no stipulations? If you want your money back anytime in the next 3 months, please just email us and get your money back. It's $300. Okay, between us, that's not going to make or break us. Like, we wanted to build a site, and we really want people that want to be here. Like, if you're not comfortable, if you don't have the time, like, we get it. The funny thing is, that always happens. If you ever leave TheoTrade, and once you've seen it, you'll always come back. We realize that's how we built over 6,000 clientele on the site. Okay, once you've seen what we do for $300 for 3 months, no one ever goes anywhere else. You can't, because what we can provide, all right, is incredible at that. We have, again, there's 8 now full-time instructors here at TheoTrade, all providing criteria, different genres of trade. I'm going to show you a little bit about that. Anyway, there's a money-back guarantee. There's no stipulations, okay? No excuses, no questions. You don't even have to email us commentary. Just email us and ask for your money back. You can go to theotrade.com/SKU to enroll for it. By the way, I will pull that site up briefly, okay? As you go in here, okay, support at theotrade.com, you simply click add to cart. I'll just throw one little caveat in here when you click add to cart. Please put your phone number in while actually enrolling in here. The phone number automatically then elects text messaging. If you don't, you're going to have to actually enroll for text messaging later. Anyway, put the phone number in there. Okay, we just automatically enroll you for text messaging. You do not have to worry about a million text messages, right? At most, in a wild week, you might get maybe 6, 7 text messages at most in kind of a wild week. And as I said, it's $297. You can do 2 payments, you can do 3 payments. We don't care. Listen, there's a money back guarantee on it. And I want everybody to know that. Again, the site is theotrade.com/SKU, and you can enroll for it. Now I'm going to explain everything that comes with TheoTrade. Again, you can enroll for it. And even if you don't like it, like, start checking out the Ultima class in the next 24 hours. If it's not for you, we get it. Okay, but you have 90 days. And we want people to spend like the 90 days in there. Why? Because you'd be shocked at what we can do for, you know, and how everything, it's all encompassing, right? If there's anything that you need in this business, education wise, ask us for it. If we don't have it, we'll get it for you. All right, onward and upward. Here's the bonus. Obviously, we're doing the Ultima class, and we're giving you the inflection point spread class. There's a lot more. We go beyond like one class or one indicator. Like, we get, and again, I watched from both thinkorswim and TD Ameritrade, like, I watched the whole stock market education business, and people sell a class and sell a class and sell a class and sell a class. And before you know it, you know, you spend $8,000, $10,000 on classes. You don't even have any capital to trade with. Like, it's crazy. Like, we get, you want everything to trade. You want everything to invest. You want it at one place and one price. Good. The first bonus, we do a quick start beginner's guide. What's the quick start? Takes you from your very first trade, total beginners, novice stuff. Why do we put this in here? Because there's a whole start here menu. There's a whole start here menu. By the way, this is TheoTrade, and this is actually the site. And you can look at the archives and all the different archives in here. But look, options 101, options 201. We had to get you started somewhere. I actually suggest that even those of you that are highly experienced, at least start in options 301. I don't care how good you are, 301, 301. check this out. Order execution part 1, 2, and 3. You can't possibly understand that. This has to do with payment for order flow. I teach you everything about like Citadel. Anybody heard of Citadel? That's who actually takes the other side of your orders. Teach you about Citadel, Virtue. It teaches all of it, how the entire brokerage side of the business works. We actually teach that inside of this. Okay. There are nuances that we can give you. Very few people in the entire industry, like maybe a handful actually have. So that's the quick start beginner's guide. Bonus number 2, we give you access to every class that we have ever done here at TheoTrade. There's over 100 classes. Obviously, you're here for the Ultima income generator, but you get access to every other class too. Why? Okay, it's the only right thing to do. Look, here's the start here menu, but here's TheoTrade class archives. We do option classes. We do option newbie classes, technical analysis. People say, what about charts? What about charts? You think we don't have market technicians? How about we have the guy that actually built thinkorswim charts? He built almost all the studies in thinkorswim charts. His name is Jeff Bierman. He's also a professor of finance at DePaul University in Chicago. He works with us here at TheoTrade, right? He was one of my right-hand people when I worked at thinkorswim and TD. We have day trading classes, stock classes, futures and bonds, pairs trading. Just to give you an idea how many classes are in here. I don't want to overwhelm you. I want you to realize, okay, everything is in here. Inflection points, income accelerator, Ultima, all right, controlling your risk. You scroll down over here, in-out spreads, the 2018 edition. That's one of my favorite classes, okay? Here, there's actually an entire class on VIX, trading VIX options, option Greeks, tetrapod spreads, ratio butterflies, okay? Every one of these classes has unique criteria with it. You want to see inflection point class? Okay, this is one of the most recent classes I've just put together. All right, class is less than a month old. This is it. So you can actually see the class. You can download the slide deck right here. It's all in here. And literally to watch the class, you just click play. Okay. Good morning, everybody. Welcome. You can actually maximize the screen. You are watching inflection. It's all in there, right? Those are the classes. Over 100 different trading classes are available in here, right? Iron condors, which again, this actually teaches you iron condors with risk mitigation, day trading, covered calls, okay? Bonus number 3, you get access to our chat room. What's the chat room? We have a live trading room where you get to see us trade live for 6 to 6.5 hours every single day. The room goes live 10 minutes before the trading bell, okay? The bell goes off in the afternoon, we wrap things up. We trade and we have different traders with different genres of trade, okay? I know that not everybody can make it all day long, but this is just part of TheoTrade. And I also know that other education firms charge $300 a month just to go into their trading rooms. We don't do that. I mean, we just, hey, listen, this is TheoTrade. We do text and push notification and trade ideas as well. So if we're trading live, okay, and it's something we want everybody to see, we fire the trade out via push notification. We have 5 distinct trading portfolios. We also do daily coaching sessions. So we're not just trade, okay? We have like Jeff Bierman, who's a professor of finance, okay? Jeff predominantly does continuing education. There's a lot about technical indicators, okay? Risk reward. And I put the most significant amount of weight into this, and I'm going to stress this for a moment. Here at TheoTrade, again, what is it? It's $297, okay, for 3 months. We'll email. You can actually email us and we'll email you back. And that's one of the things you realize you can email us one time in the next 3 months. If I can actually talk to you one time, you think it's not going to save you $300? Okay, you can email us 50 times. Right? There's no limitation. Just email us. If you're not confident on a trade, bounce ideas off of us. We're okay in doing that. We don't shy away from direct questions on emails. By the way, here are the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Slim Miller. Slim's a 43-year veteran. Tony Rago is our Nasdaq intraday. He just trades intraday. Blake Young, market profile, futures, currency, commodity trader. Okay. Jeff Bierman is a CMT. He's also the former chief technician for TD Ameritrade. Matt's market neutral. Corey, he's actually our resident swing trader, also a CMT. Brandon Chapman's our macroeconomics, also a CMT. Okay. Steve Miller, he actually does our in-house psychology. He's awesome. Okay. Tony Rago, intraday. Blake Young, market profile and futures. Again, you're going to love what these guys do. Everybody takes time each and every day and broadcast live. Here's actually the crew kind of working from home during COVID. All right, access to all of our indicators and scans. We don't sell indicators and scans. We give them to you from day one. I use a couple of interesting little setups. I'm not much of a market technician, okay? I'm not much of a market technician, but what I want to show you is I use stuff like Quantix here, okay? Quantix, we give you this, all right? We have a TheoTrade RSI Ligier, we give you this. The auto expected move. This is something I'm going to give you the link to auto expected move momentarily, okay? All of that is given to you immediately. Bonus number 4, the TheoTheta Live Portfolio. What is this? This is exactly what we've been discussing. The TheoTheta Live Portfolio, okay? This is the premium selling portfolio. It's a no holds barred trading approach. I trade this. It's full disclosure on all trades, opening, closing, and hedging positions. You get to see me trade and discuss positions like never before, okay? We also have not just the big boy portfolio, we also have a new TheoTheta small portfolio. That's a portfolio for accounts $2,000, $5,000. If you have an account that's 100,000 plus, you can follow me in every trade. If you have a smaller account, you can follow me in the TheoTheta small. And we actually, okay, have completely different portfolios for those. The portfolios look like this, where you can actually copy the trades. It's just a spreadsheet. You can actually copy the trades verbatim and post them directly into the trading application. If you can't watch TheoTrade during the week, don't worry about it. We do weekly updates. Every Friday morning, we will shoot out an update to you, okay? The update is 12 minutes long and will cover every trade that I did in TheoTheta, in TheoTheta small, okay? And it walks through. None of the trades that we're doing are like, oh, you got to get on it, you got to get on it. We're not in and out of anything quickly. Okay, we put positions on, we allow them to kind of mature, readily, we pull them off. You don't have to panic to get in and out of these particular trades, but there are detailed updates every Friday. By the way, you can go back and listen to some of the updates too today. Everything that you're seeing here is included. Just navigate the site for it. Bonus number 5, technical analysis toolkit. We have several market technicians, Tech 101, Tech 201, MACD indicators, timing-based trading systems. There are 21 other technical analysis classes. Bonus 6, there's a day trading treasure chest. If you do want to day trade, intraday trading Nasdaq futures with Tony Rago, the day trading ES futures blueprint with Corey Rosenblum, consistent intraday strategies and setups, all right? You're going to love, again, the archives here. Bonus number 7. Not too often I say this, write this down. I think one of the most important courses here at TheoTrade is right here. It's the 5 essential building blocks to successful trading done by Slim Miller. We originally did sell this course for $1,000, okay? Now it's just part of the TheoTrade archive. So the reason I say write it down, for $300, when you come here to TheoTrade, it tends to be a little overwhelming. I mean, I think for your $300 though, you'd rather be overwhelmed rather than underwhelmed. But in this mix of classes, if you will, there's over 100 classes. There's a few that I'm going to say, like, you need to see this. You need to see this. The 5 essential building blocks to successful trading. It'll change your entire perspective of what a market really is, right? He gets very deeply into the psychology of markets. And even if you're like, oh, I'm not into that stuff, neither am I. This will change your whole entire mindset of how you view markets, okay? I think it's essential. Anybody that has experience in this business is going to get a huge amount out of it. Bonus number 8, quick start to Ultima trades. We actually built a quick start guide specifically for those of you that have experience. It's kind of like you open up a new piece of technology and they have like a quick start guide. We do the exact same thing for Ultima. It'll get you up and selling premium almost immediately. Listen, what our members are saying, this comes from Pat in January. Thanks for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one that I see a pathway to retirement, okay? We include everything you need to invest in trade, right? Classes, coaching, email access to the instructors. I put a huge amount of weight into the email access, live trading room, indicators and scans, mobile access, everything you're gonna need. We literally built like a Netflix for traders. It's $297 for 3 months. By the way, time out. This is not a membership, okay? It's not a membership. Everybody always asks what happens after 3 months, okay? Pay $297 after 3 months. If you want to do it again, we ask you. It's $297. We do not do reoccurring monthly charges. We don't do it. So every time, if you want to do TheoTrade again, it's $297. That is what is right. Okay. We give you the Ultima income generator. We give you access to over 100 trading classes, new monthly classes, the inflection point spread. Okay. This class is the newest one here at TheoTrade. Nevertheless, okay, later this month, there's another class coming from Blake Young. Okay, another class coming from Blake Young later this month. Indicators, text and push notifications, daily coaching sessions, and we answer emails. It's all $300 for 3 months. If you go to theotrade.com/SKU, again, theotrade.com/SKU, you can of course enroll for it. And I'm going to answer some questions here momentarily. I want to make sure that everybody's good, okay, and gets all of their questions answered in this particular context. So I'm going to bring you back over to the site, theotrade.com/SKU for just a moment. You simply click, again, add to cart. As you click add to cart, okay, pull this up. Please put your phone number in there. It'll automatically enroll you for text messaging. It's just something that always comes up here at TheoTrade. People are like, how do I get the text messages? With that, it's a completely, again, riskless trade. So as a money back guarantee, this is the second time I'm bringing it up over here. If you're not satisfied in the next 90 days, email support@theotrade.com. You can receive a full refund. It's only $300. There's no stipulations to the money back guarantee. Okay, you don't have to trade. You don't have to do a little dance or make a little love or get down tonight. Okay, just ask us. There's no excuses. There's no questions. There's no commentary needed. Email us and ask for your money back. If you receive a refund, you get to keep bonus number 1, which is the quick start guide, completely on us. By the way, you can view the inflection point spread class. You can view the Ultima class, and you can still get your money back. We're pretty confident once you see what we do here at TheoTrade, that people want to be a part of TheoTrade. And again, I always insist, make sure you want to do this. Like, we want people that want to be here. We give the money back guarantee, though, for you to be able to check it out. I mean, and everybody wants that, ability to be able to do that. But get into TheoTrade now. We're going to work with you directly. We give 30 spots on the riskless deal. And we do that specifically to incentivize you to enroll today. All right. Why? Because first of all, it's a matter of trading sides. We trade live. We provide unlimited email mentoring. So we take the first 30 people to enroll today. As you enroll today, the first 30 of you, okay, get a completely riskless offer in here. And what that basically entails is you can get your money back anytime in the first 90 days. So we give you that specifically for today. It's a completely riskless trade. The $297 riskless offer. It's never been available for with Ultima, plus inflection point spreads. Plus, again, there's no stipulations, the money back guarantee. Like, again, we're really comfortable with that. By the way, again, the address, it's theotrade.com/SKU, theotrade.com/SKU. I'll just give you a quick heads up on here. I will read off your first name, okay, and the first initial, okay, of your last name, just to let you know if you've enrolled. Okay, again, it's the first 30 spots that are filled, get the completely riskless offer. And we have a lot of people on today, but the first 30 people in here, and I will let you know. And again, I can see it, but it takes about 5 to 6 minutes before it actually shows up on my side. Anyway, if you go to theotrade.com/SKU, I'm going to answer some general questions here in just a moment. As you guys are enrolling, I will let you know that you have enrolled, that you're one of those 30 spots. I'll read a couple names off. As I said, though, it takes me maybe 5-6 minutes before I see your name kind of populate in here. All right. What our members are saying, my closed year-to-date profit from Ultimate Trades has paid for my yearly TheoTrade subscription. Nice. Okay. This is actually pretty much as recent as it gets, from March 30th. Okay. From John. This is Ultimate Income Generator, Quick Start Beginner's Guide. This is everything you get for $297. 100 trading classes, VIP. Okay. The VIP is to, okay, the VIP is to the chat room. The VIP is to email. The VIP gives you what? Email access, our chat room. And again, I don't think I spent too much time over there, but this is TheoTrade. Okay. When I say this is TheoTrade, I'm actually going to refresh and show you the live room.
But for all intents and purposes,
this is actually Brandon Chapman that's live presently. Okay. Just talking a little bit about markets. And again, don't fight the Fed. I love it. So you can actually see in any given day, there's over 4,000 different names in this chat room. Okay, we have over 6,000 clientele, but we actually see about 4,000 people in and out of the chat room every single day. So you can communicate with any of the other clients in TheoTrade, ask them about it, ask them what they feel, okay, what trades they're following and so forth. That's fine. That's all fine over there. But you can see everything that everybody's doing in here too, which is great. I mean, you can even share your trades if you're so comfortable with other clientele in there. Okay, so quick start beginner guide, over 100 classes, the chat room, okay, the TheoTheo portfolio. And by the way, the TheoTheo portfolio, as you go into TheoTrade, you just come over to portfolios, duration portfolios, black book. Here's the Ultima TheoTheo portfolio. And what this basically does, right? We just list out the trades. This is actually a big Christmas tree I just did the other day. You can actually copy the entire trade and paste it directly into your trading platform. Couldn't be cleaner. So the trades themselves are just copy and paste. All the opening trades, all the closing trades. Okay, everything is right there inside of the portfolio for you. Okay, then we come to technical analysis, day trading treasure chest, mindset mastery, and the ultimate trades quick start guide. This comes from Jeremiah, March 19th. My first 4 trades following exactly the details in your Ultima class just closed out for using GTC orders. That stands for good till canceled orders, set right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribed to your service. Keep up the good work, Jeremiah. Okay. If you go to theotrade.com/SKU, I want to remind each and every one of you, again, it's completely riskless trade, but also on the bottom of that page, if I scroll down, here's actually the link to the auto expected move indicator. So the link is found there for the auto expected move indicator. Listen, as you guys are enrolling for this, you don't have to download the auto expected move indicator. As you're enrolling for it, okay, we have that on our site. We'll give you every indicator. And I really stress this. There's nothing here at TheoTrade that you're going to need, beyond what we're doing here. You just click add to cart, $297. And I already see people asking what happens after. Okay, what happens after that? It's okay. Like after that, you can pay $297. Somebody said I'm already a member of like in out. Okay, yeah, this is everything we do here at TheoTrade, all encompassing here at TheoTrade. So by all means, you can kind of jump in here and see the full Monty of all the different portfolios. So I know some people have kind of dabbled and checked out, a couple of the videos we've done online in the past. Well, now you get to see everything. So again, it's theotrade.com/SKU. I'm going to read off some of the questions in here. By the way, I wanted to read this one. I like this one. I wanted to drop you a quick email. I think the class is wonderful. Been stretched each session, but not beyond my capability. Okay. After each session, I watch the recording and do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Thanks for the great introduction. This one's a little bit older, but I wanted to include that particular email in here. And sometimes I do share emails, but I include them because there's a purpose to this one, and it's really methodical. Like I think the education, you come in here the first time today, this is shock and awe. It is shock and awe, but the education itself is really methodical, and I wanted you to see that. The other one I really wanted you to see, it's a recent, more recent email. It's from Todd Summerall. It says, don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay. The reason I bring that email up is I want you guys to know that you can ask us things directly, that you don't have to hedge around like my roommate's dog's brother had this trade on. Hey, forget all that crap, email us. Like who else can you even talk to these days? I'm not saying that facetiously. If you have a Robinhood account, what do you think you're going to do? You're going to call up Robinhood? Broker's going to answer the phone? I don't even have anybody to answer the phone over there. What do you call Ameritrade? Call Charles Schwab? This is Chuck. The logo ain't Ask Chuck anymore. Chuck bought Ameritrade. So what do you have now? You got Walmart. It's Walmart of the brokerage business. Okay, there's nothing wrong with Walmart, but if you need help, you're on your own in Walmart. Feels like Home Depot these days too, right? You walk into Home Depot, like, I can't find anything in this place. And they go, that's the idea. It just keeps you in here longer. Listen, we're there to be able to answer the questions that the brokerage firms don't. We're there to get you set up and get you trading effectively. Okay. We're the educational arm the brokerage firms can't do anymore. I have no qualms in saying this. Here at TheoTrade, look around. There's a lot of educators out there. And I know there's a lot of educators out there. How many educators, okay, have marketing relationships? Check this out. Tradier, Magnify, Tastyworks, TD Ameritrade, okay, all of them do business with us because no one trades like we do, all right? You know how we get to that point where they're doing, 10,000 contract trades, okay? It's effective trading. That's why these guys partner with us. We just also recently partnered with the small exchange. It's a small options exchange, okay? They're new as of last year, but we just recently partnered with the small exchange, which is, again, we're even going to the exchange level and partnering with exchanges to further your education. You'll see a lot coming from the small exchange. The exchange itself is going to come on to TheoTrade and do education about their products. I'm going to answer a couple of questions, general questions, and I'm going to answer specific questions. By the way, I just wanted to read off a few names, okay? And the reason I'm reading off a few names to let those of you, as you're enrolling for TheoTrade, just to let you know you've enrolled for the riskless deal, okay? Marhan S. from Florida, Jeffrey F. from Minnesota, Rudolph S. from Texas, Ahmed J. from Georgia, David O. from Washington, Corey S. from Tennessee. That's just the first batch of names that I just saw come through. There'll be another batch. Again, it takes maybe 5 minutes before I see your name kind of populate inside over here. Oh, I see a question from Poolside Trader. Okay, I love it. This is awesome. By the way, Poolside Trader, which, I know you because you said, by the way, a few more names are coming through too. Poolside Trader said, I'm a TheoTrade graduate. So I say with full confidence, there's no better place to learn trading than TheoTrade. I appreciate that, Poolside. So we haven't talked in a long time, man. By all means, shoot me an email. By the way, a few more names coming through right now. Paul P. from California, Marion P. from Oklahoma, Tony C. from Washington. By the way, I love the name Marion. Always like that name. It's my mom's name, but I've always loved that name. Jim M. from Florida, Jeff T. from Nevada, Hector T. from Canada. I'm just reading off a couple of the names. So far, I think I've read off about 12 or 13 names. Those are all qualified for the, again, for the unlimited 90-day, obviously, refund. Let me answer a couple of questions and I'll come back to some specifics. People always ask what we need to get started here at TheoTrade. One thing I'm pretty adamant about, we try to provide you everything you're going to need. You need an internet connection. I don't even think you need a laptop anymore. And I'm serious about that. Like, you can use any tablet. I don't have my iPad here, but you can use pretty much any tablet, iPad. You don't have to have a good one. Okay, it's funny. I just left Arizona last week to come back here to the island, and before doing it, it's kind of hard to get like an iPad on the island. But we went to Walmart and we bought. Walmart's the only store that was by me that had it. We bought, a bunch of new iPads, just a $300 version, and I'm like, this is the greatest thing ever. I don't have to worry about it like the iPad Pro. Okay, I can buy 3 of those iPads for the price of one iPad Pro. And I run everything on it and I trade on it constantly. So we have what you need from the most novice to the most extreme. And I always say this, if there's something that you need education wise in this business, let me know. Like, personally, let me know. I don't care that there's 6,000 clientele here. I'll answer your email. Like, just let us know. Okay. Number 2, this is not a membership. We don't auto renew or bill again. Everybody's always worried about they're going to bill my credit card. I've been through that personally, and it's one of the reasons we don't auto renew or bill. This is not like a gym membership where you have to like give blood to get out of. All right. Number 3, we provide Theo Theta weekly updates. As I mentioned, we do an update video that lasts 12 minutes. In that 12 minutes, I give you every update of every position that I'm doing throughout the course of the week. We archive everything here at TheoTrade, every word spoken and every day. We understand you can't watch through every trading session. Not only do we archive it, but we give you access to TheoTrade Mobile. Okay, and if you've never seen TheoTrade Mobile, well, you can actually go ahead and you can download TheoTrade Mobile. In fact, we're in the midst right now. We're about to release a new version of TheoTrade Mobile. And again, if you're like, what is it? You know, what does it do? You can watch all of our archives on it. So I'm just looking for a newer version of it. So as you actually go into TheoTrade, and again, it's kind of cool. Well, I don't know if you can see. You go into TheoTrade, okay, and we can actually go through and test out like some of the new app. Like literally, you just click today's member reports, day trading classes. It's all available right in here. And you can actually download onto TheoTrade Mobile, so you can stream this even on an airplane without an internet connection. We built it actually really similarly, technology-wise, to what Netflix did. Okay, so everything's archived. It's all searchable. Number 6, add your cell phone number when you enroll to receive text messaging. Don't worry about a million text messages, and you can stop. If like, oh, 6 messages in a week was too much, you can stop at any time. If you are not capable of receiving text messages, we also do push notification through our application, right? Number 7, you can email us anytime, receive a response within 24 hours. One thing I always say, you have to give us a little bit of time to respond to your email. The reason I say this right now, okay, I don't want you to be upset because you email us 5 minutes to go to the cash close on a Friday, right? It's Friday. We trade. And the last thing I'm thinking about on a Friday afternoon, I'm thinking about getting out of my own positions. I'm usually live sometimes at that point, okay? Give us a little time, get ahead of it. If you're in a position that's a really rough position, email us. Don't wait until it's too late, okay? Email us, get ahead of it. That's all I ever say, all right? Number 8, you're gonna gain access to every course we've done in the previous 5 years. It's actually, now we're in the 6 years, including classes and coaching and archives, okay? Everything is searchable. So we actually built like a little version of Google in our own site, okay? Name a topic and we have an archive on it. Variations of all the trades we talk about. You could do this in an IRA, retirement account, with as little as $2,000. We can also help you get approved for options trading at several major brokers. That's why I brought up, there's a couple of different brokerage firms we work with, okay? It depends on you. You know, well, we work with TD Ameritrade. Yeah, well, we also work with Tastyworks, and we now work with Tradier, and we work with Magnify. Okay, there's a couple of different brokerage firms that we absolutely do business with, and it's important that you know it's not one size does not necessarily fit all. It depends on what you're trying to accomplish. Somebody just said, "Hey, I'm from Canada," you know, but we have a brokerage firm we can actually suggest in Canada. That's okay too. Listen, there's 30 riskless trade spots available. Okay, I see another batch of names. Another batch of names coming through. And I'm going to answer some specific questions. Again, go to theotrade.com/skew. In fact, here, let me actually pop this page up. All you have to do is click add to cart right here. You're good to go. I'll put the address up there. It's theotrade.com/S as in Sam, K as in kick, E as in echo, W. theotrade.com/skew. Okay, a couple of the specific questions in here. Make sure that I get all of these kind of answered for you. Okay. Oh, I like this one too. This is more of a comment, but Alex was saying a moment ago, y'all, I've been around the block with trading education. TheoTrade is the one that worked for me. Thank you so much, Alex. Okay. All right. Oh, you know what? So Jim was asking, where was the hedge against the Tesla short call? The hedge against the Tesla short call was actually embedded into the position, Jim. This was actually a version of an inflection point spread. In fact, I'll even show you that example in the inflection point spread class. So in the inflection point spread class, I'll actually show you how to put the hedge embedded in there. I thought that might have been too much to actually show you for the opening and closing, but the part you were missing was the hedge in there. Totally get it. So the inflection point spread class will actually show you exactly how to do that. Okay, you're showing 50% return. Okay, what does it look like in terms of dollars with like a $2,000 or $4,000 account? Okay, so one, in a $2,000 or $4,000 account, you're going to go out and you're going to put positions on that realistically. And again, I want you to understand, you may go out and sell something for like $200. You make $100. Okay. That would be a, for instance, of against a $2,000 account. So you may go out and sell something. Okay. It'll be a $200 credit and you'll only keep $100. You go, it's only $100. It's only a $2,000 account. I want to give you, okay, realistic returns. And I know that, you're going to cruise around the internet and you're going to be like, oh, this guy says I can make quadruple my account. I want to keep you in business. I want to keep you actually building account consistently. Like, this is not YOLO. If you guys know what YOLO is, you only live, once. That basically means, roll the dice on this, right? I've been in the business, right, and I've been around it my entire life. People that survive in this business, it's not, big hits and making money. It's consistency. Okay. You just got to show up and you got to hit it every single, month after month after month. And eventually get a couple losses here and there. Just got to keep chugging along. Okay. Some people say picking up nickels and dimes in front of a bulldozer, right? We're the bulldozer, because you're going to find out after time, you want to be slow. You want to be methodical. And you want to build an account. I don't care whether you have a $2,000 account. You got to understand, whether you have a $2,000 account or a $2 million account, it is so critically important. You just got to get up. You got to get trading. Okay. Some people feel like, I have more money, I'm going to be better at this. You're not. Start with 2,000. Everybody should start with 2,000. Buy or one lots, collect $100 here, $100 there. Okay. Build the portfolio over time. It's critical. Okay. Frank B from Florida, Cecil M from Texas. Just reading off a couple of names as they kind of come through. All right. So, Seth was actually saying this a moment ago. You can't be down 600% in an iron condor to define risk trade. So actually, you could, right? So how can you be down like 600%? So the way the percentage works is, like, for instance, you sell, right, a $10 wide iron, and you sell it for a $1 credit. Okay. All you basically have to do is you take a big hit on here. Well, if you collect a $1 credit, okay, what's the most you can make? Well, the most you can make, of course, is $1. What happens if all of a sudden the trade, okay, goes in the hole? Now you're down, for instance, $7 or even $8. So if you're down $7 or $8, you're taking a 700 or 800% hit in here. If you collect the full dollar, again, if you collect a full dollar, well, the most you can make is the $1, but you can actually lose 7 or 8. That's actually, could be a 700 or 800% hit. Actually, one of the worst losses that I ever saw in all of my years, Seth, was actually an iron condor inside of the Russell. And a gentleman had actually done over 200 contracts one day. And I'll even give you the day. You can go look it up in the chart. He did the trade in the RUT, the RUT, and it was an iron condor. And it was late February. I think it was February 26th of 2007. The volatility the next day, he sold the iron, I think on the 26th. And the 27th, the volatility went up. The VIX was at 11. The very next day, the VIX was in the 20 region, the low 20s. Okay. His trade, he had sold it. It was a big boy iron condor. I remember he sold it for just under $1. The very next day, he had to pay $8 to get out of it. But it was like a 200 contract trade on there. Things like that. You don't forget. You don't forget. It was not a pleasant run over there. Okay. So so another question over here, why you're focused on a dollar premium? Yeah, that just kind of made it easy. So Tony, yeah, that just made it easy in there to focus on like the dollar premium. Actually, when you're selling premium, you'll see this actually in the class, but when you're selling the premium, the focus of the premium, it's not on the dollar amount. The focus of the premium is the right delta. And actually the delta from the calls varies to the delta of the puts. Okay. So the delta of the puts, I'll just give you an idea. Like we were talking, oh, you could sell like a 350. Yeah, I know a 350 put has a 6 delta. Okay. But it's the delta of the puts and the delta of the calls. And it varies from calls to puts. And you'll actually see that inside of the class. Right. So that's easy enough to kind of explain, but it's critical. It's absolutely critical. So the dollar just makes it a little easier to explain in that context. Okay. Daniel was saying picking up pennies in front of a freight train. Okay. Yeah, no, actually, as I was saying to you, you can't go out and just sell premium and expect to make money, make money, make money. There has to be some kind of hedge. Lots of people have figured out to like sell options premium, lots of people. What they don't usually figure out though is how the risk mitigation side of it works, okay? And the risk mitigation side of it is that's how you survive in this business. You know, these positions have built-in risk management mechanisms. And in some cases, like if you look at my positions right now, in some cases, my position actually does well the more volatility we see. The inflection point spread does extremely well in light of everything that's going on inside of markets. Listen, I've kept everybody on here for forever. I want to wrap things up. Go to theotrade.com/skew. There's a handful more spaces left. And again, I see some more names populating in here. When we wrap things up, I'll be here for a few minutes to answer some questions. Kind of non-verbally, I'll just type some answers to you. theotrade.com/skew. If you enroll today, there's a if you enroll today, there's a 90-day money back guarantee. Okay. It's only $300. It's 3 months, okay, on TheoTrade. And we want people that want to be here. So by all means, if you have some more questions, Brian, myself, Jeff will be in here to answer those questions for you. Thanks everybody for tuning in today, and have a wonderful afternoon. Bye-bye.